Uh-oh. Let's get it going. Mm, Ooh. Good morning. Ah, it's Lieutenant Brooksy. Let's go, Lieutenant. What a week, man. What a weekend. Oh, man, that's an ugly looking candle on GME. Just gobbled up. Gobbled up that candle, huh? But, you know, it's early in the morning. I wouldn't have necessarily expected it to run like first thing this morning anyways. I'd be kind of surprised if it like reversed hard. But I guess that's debatable. Mainly because I felt like last week the setup was kind of straightforward. It went to find a bottom around 2170 on GME, and it pumped back up to the 24 area. And I don't know. I guess normally what I would expect to have happen is some kind of a range. So if it did continue and it pushed above the recent high, then it's got to make a decision sooner than later. And it doesn't have to be like written in stone. It's just so the nature of a range is really important. Like once you reach what's called a buying climax, then you want to pay attention to the way the range sets up. A push higher than it needs to go here would actually indicate something bad potentially. If it pushes up again and it does it on weakness, then you're in bad shape. So you don't want that. So at least for GME, it was kind of like, did I think it was going to moonshot? Not likely. Plus, we had the Roaring Kitty stuff, which frankly I think they're going to sell. Inside the triangle with support, AMC. I guess it depends on which triangle you're looking at. Are you talking about this one? This rising one? Maybe, yeah. Again, like, it's kind of early in the morning. Probably not worth speculating too much on anything just yet. Really, there's not really. I mean, it sounds weird. I'm not a Monday morning trader. I mean, there's people that do that, and they're pretty good at it. And they look at. See, this did come higher, so that's interesting. Anyways, I'm not a Monday morning trader. There's people that look at the primary trading action Monday and then they basically just trade the day or trade the whole week based on that action. And I think that there's reason to that. I mean, there's good reason to do something like that, but I'm just not that trader, so I've never learned that skill set. So in general, Monday mornings for me are just kind of sit tight, give it an hour, see what happens. Because though there's definitely an opportunity to make a lot of money here, if you don't know what you're doing, you could also lose a lot of money. That's the nature of higher volatility on Monday mornings. So, this is the daily chart. I'm not showing anything really. Probably could have talked about this on Friday. Maybe we didn't because I left a couple hours before the day was over. So it'd probably be good for us to kind of just gently recap ourselves this morning. But it doesn't look like, it looks like it's got a lot of room down to like 477 if we needed to do a back test. This 200's been a struggle. It's kind of interesting because when you look at the small term, we were looking at this last week, I'm like staring at this thinking it's a wedge, right? It has a breakout target of like 512, maybe. Hey, good morning. Good morning, Shaw. Nicholas. Hey, Nicholas. You were the one that asked me about a chart last week. So remind me of that today so that I can look at it for you. I didn't forget, not completely. Yeah, we're definitely moving. It's not, don't get me wrong, like we're in a good place to continue, but sometimes you have to have that back up to a creek or that back up to the EMA in this case. And I'm not seeing it. Like I see on, let me put it this way. Maybe it's right here because I can kind of tell, I don't know, maybe. This is one of those things, like it's just sort of a matter of opinion. Like generally speaking, I don't count a backup on like a 15-minute time frame. But there are times when the price is breaking out or it's advancing that you won't see it on like the bigger time frame. So like normally I would be looking at this on the daily thinking, oh, this needs to come back down and then it can continue because it didn't really make a back test here. You can kind of tell what I'm saying, I think. So like right there, there's nothing there. And that would be your 200 SMA, which like I say, it's kind of interesting because on the small time frame, it looks like a wedge here. And I think it is, but I also think it's kind of like a wave, right? Wave in, wave out kind of thing. Interesting to me because on the larger time frame, it kind of looks more like almost like a widening. And it might end up proving to be a widening. It looks like it's widening between these two creeks, like, which I guess you could call them, I don't know, fan lines. I'm not really sure. I think the best way to call them is creeks, but do y'all see what I'm talking about? Maybe you do. It's weird because again, on the small time, it's like you see that like little zigzag right here and it's like a little wedge going down. But then on like the larger time frame, to me it almost looks like again like a widening is starting to form here, which would indicate reversal potentially. And it kind of goes back to maybe why we had an up thrust to begin with, because there was I'll still say to this day that I think it was too high, but I mean, if it's a phase B, it's a phase B, and that's okay. You can survive that. I wish I was better at Wyckoff. I could tell you whether or not it is for sure, but I don't know. Like normally you see that up thrust is not the best. So we're worried right now about a hook. We don't want this to come up and hook here and then drop. Um, but in reality, like looking at this now, it's like, well, this was the first creek jump back here. Here, I'll try to bold this. Actually, you know what? There's like a big fat arrow tool. I don't use it very much. It might be helpful for you all though to see it better. So like back here, that was where the first creek jump happened. And interesting because the second one, so this was on August like 14th, and then the second one, which was kind of a weird one, which was like a head fake, was on the 27th. And you can see it's like, it's kind of establishing two creeks. Well, one is like back testing this one. This one's obviously, I'm not saying obvious because I think it's necessarily obvious to everybody who comes on here, but more like you can see it because it has so many hits on it. That's what when I say obvious, I'm not saying like, if you don't see this, you're missing out. No, it's like, it's got so many touch points on it. So like a strong trend or a strong pattern is going to have more than like 2 or 3 touch points. 2 is like bare minimum, and it pretty much doesn't even constitute much of a trend. 3 is, it can be a trend. It can be just like a mild resistance. I use those cat ear tops, which are only 2 hits usually, to define a creek, which again, that's just because of observation, like how this often is you can call it like a tangent on the top of a sine wave where it's like rolling over the top of the hill. And then later that's used. So like later on that's used to help define the creek. But like 3 is actually ideal. And then any more than that's just icing on the cake. So you would want like 3 hits on the top, 3 hits on the bottom. Those are really strong. And they call it like tight versus loose. For pattern analysis, a loose pattern may not really hold, but it's visually there. It may not hold a particular trend, but it's definitely still there. That's like in a widening or a narrowing where you can't really identify where the top or bottom maybe is because it's not really holding strong to the maybe the trends that exist. But I digress. My point is, when we talked about this originally, it was like, and I say originally, I'm talking about like on August 22nd. I remember talking about it on that Thursday, because I was acting kind of weird, and I said, maybe this thing goes into like some upthrust and then dives down because it doesn't seem to have enough ammunition to get beneath 491. And we're back there again. We're like back above it again, which is great. But we're at 499 right now. Slightly green. I wouldn't say very green. It's like 0.2%. But I thought maybe the operator needs to have an upthrust because you're running out of steam. There's just no volume. They can't drive the price back down. That's exactly what they did. They just went really high. Holy cow, that was really loud. So we crossed 5. I'll turn. So it makes sense then that like a lot of this stuff is lining up with EMAs, and now I'm looking at it and I'm like, it does kind of seem like we're basically just swinging around that 200, doesn't it? And this is what I'm concerned about because I know that acted very, very strongly multiple times as a resistance. And then we're really, really struggling to get across it. It's like they won't commit to a breakout, So like all in this area right back here, it's resistance until it finally isn't. And that's a testament to good work on our part because we were looking at this as like, this is the main creek body and then this is the creek jump. And I didn't realize that the 200 SMA was right there till someone in the Discord pointed it out to me and they're like, hey, that's the 200 SMA. I'm like, oh, really? Well, I chalk that up to just, again, mathematics. Like, there's always going to be something there, that's important. It looks like we're pushing over 5, which is good. So, anywho, I look at this and I'm like, all right, at this point, I think the main creek itself, we would argue, has probably been jumped here, but The issue is that 200 SMA, it seems like that's been a really, on the daily, has been a really big struggle for AMC. Like it doesn't want to leave it behind. So here's where the danger comes in. You guys are, what's the danger, Booksy? I'm the danger. Darkwing Duck. uh, sorry. Sorry, I don't even know where that came from. It just made me laugh. Is that even what he says? I don't know, but that's just what came out of my brain. All right. So when you look at this, here's the danger, okay? There is a need perhaps to come back and check this guy again. And I mentioned this last week that it's really hard to say, because there's certainly like a breakout here that happened with that Roaring Kitty business, and then the 474 hit is a great hit. There's nothing wrong with it. It's just that if this is a wave, I'm not seeing like the downward motion of it. So the question isn't, for me, it's not really a question of like, will it come back down? It's going to have a pullback at some point. And when it does, it's probably going to be up here, because this is where at 507, if it can push this resistance, it's basically breaking out now. You can see of that double cross. We talked about the creek as a series of two lines coming down. We've jumped the first one, which was around 485. I think the question isn't so much will it come back, because I think that it's probably going to have some kind of an interaction with this area at 512, 508 to 512. I don't think it's going to pass right through it. Hey, if I'm wrong and it just goes, it just goes. You don't need to second guess everything in the world, but there's a sense in which I feel like this is missing. I mean, just visually looking at it, it just seems like it's missing that back test. And I'd have to go back and look at this 200 in the past and see if on the daily, for example, if it did ever come back, and check it. Does AMC have a tendency to just take off away from it? I don't know. I'm just thinking like in generalities here. You can just see it visually, like it's not really made that check. And this is the debate, right? It's like, but you're like, well, it kind of did, didn't it? You had 477 marked last week. You said it had to get over 477, 485, and it did. So what's the problem? Problem is that that's just a really small time frame. So there's not really much else to say about it. It's just really small. And it came off the back on the heels of the Roaring Kitty thing. And again, like when we look at sine waves, we're looking at a measure of ups and downs, right? And so you can see here, like this is definitely the creek jump. Now I'm going to use the shorter time frame over here on the right. This is a 15-minute chart. You can definitely see that it's a series of creek jumps. So again, it's not really a matter of like, will it come back down? It's going to have a top here probably pretty soon, and it looks like it's going to intercept with that target on the wedge breakout, which is fine. But the wedge breakout target is only 511. It's not enough to get you over the top. So it's not really me trying to be like a naysayer. It's really just looking at this pattern, and what's obvious here is that this would be a breakout wave, and you can see the momentum going up. But then you'd expect there to be kind of a pullback period. So the question I have is it going to go to, 480, 485, which would be great. I wouldn't mind that too much. That actually kind of lines up with this upward trend here, which is really just a parallel to the main gigantic bottom creek on that huge wedge. And it would look pretty nice to have that come across here, because that would be an even bigger creek jump. It would make a lot of sense to me to come back to this marker instead of coming really low. So at this point, at this venture, Inclined to think that we may see it come back down to exactly what this is going to look like, but we may see it come back down to, man, it's hard to draw this out, not knowing for sure. I feel like it's going to come back down to 485. I think this is finally going to be Booksy's happy day. Maybe I don't know, man. It's really close, isn't it? 479 though. Like again, hit that again. Does that make sense? It may make sense. So I'm going to look at two different spots here. 0.5 is 45. If it can get all the way up to, I feel like that's the best one. It already checked this one on the small scale. So it's more of like a question of time, not, I mean, it just depends. If it goes to 512, then I was right about that breakout target for the wedge. Really, if Bukowski was right, because I used Bukowski's method. It's not like I did it by myself. If I got that right, though, the measurement right, and the calculation's correct, and it goes up there, that means it pushes this higher creek, then it retraces back down. Can it go back to just, this is hard, 1, 2, wave up, push, retrace. I think it might be that 485 finally. You know, I've said it like 1 billion times. You guys are like, I'm so sick of you, Booksy. I'm so sick of this number. I'm sick of it too. Let's move on and never look back, right? We might have to look back, but I said I would bet money that it's going to hit 485 and then take off. That it would be right there when it leaves. And I still think that's the truth. So why are you so sure it's going to come back down, Booksy? It looks like it's just taking off, going to the moon. Well, I'm not 100%. I mean, you can't ever really be like 1,000% on anything in the market. All I know is that there's really three major intersections that we're about to run into right up where we are here. So when you look at 512, it's not like a small breakout. It's a pretty important area. So it really doesn't make sense to think that you're just going to fly through it. When I look at the RSI, it looks like a wave cross. Like this little lower M is the creek jump. And then you've got so you got M1 on the left, lower M on the bottom. So it looks like a sine wave to me. And then it's missing that, I don't want to say symmetry, but it is. And it's kind of an inverted head and shoulder. Some people have pointed that out. And they said, oh, I think it's an inverted head and shoulder. Now, you might be right. The thing about the waves is that they often are symmetrical in that way. This kind of looks like it's already done. Okay. I think it might go a little higher than that, but yeah, I mean, that's the thing about the waveforms is they often do that because this bottom of the wave is going to have a sine wave in it. The top of the wave is going to have a sine wave in it. You know, one way to look at this, although you may not want to, and I know I'm kind of blabbering a lot, I saw that a couple of you guys signed up to be members. Really appreciate that. Welcome to being a member. Right now, there's not a lot of member perks. I'm trying to work that out. I haven't forgotten about it. I'm just trying to, I got a lot going on, so I'm trying to make sure I take care of business, and I'll get to it, I promise. You will have access to posts and stuff exclusive, but right now I haven't really done any member-specific things otherwise. Um, if you do sign up to be a member, those proceeds are going to go towards a kind of a nonprofit effort on my part to help young persons or families who can't afford like a martial arts thing. I've talked about it a lot, probably so much that you guys are already getting kind of tired of it, but I need to repeat it because I want you guys to know that's not lining my pockets. I'm going to be able to announce pretty soon maybe how that impact is taking place. We haven't gotten there yet, but we're really close, like really close. So that's good news. So I'll tell you guys about it as soon as I can. What that's going towards exactly, right? So it's not like vague. I've talked about it a lot, but it'll be nice to see it actually work out in practice. Anywho, backing up a little bit. Appreciate you guys for doing that, but I'm backing up a little bit. I'm just talking about this again. You could, in light of what I just said, look at this as a gigantic wave. Some of you guys are like, oh, I don't want to do that. Yeah, I know. But it's actually not a bad thing because to try to do, because what this is a giant wave. Like if you look at the big picture, it should look really small. And you guys are like, I thought you said we weren't compressing anymore. Well, we are and we aren't. Like it's contradictory for me to say that, but the main iterations downward ended here, and then after that you're working out. But to think that you're never going to compress ever again doesn't make any sense. Like the market's both compressing and expanding all the time. If you look at fractals, why? Because fractals are repetitious in themselves, like within themselves. So it doesn't make sense to think like the compression is over, therefore it's all going to be just upside, and there's never going to be any other kind of iterative motion. I'll say this, it seems that the motion that was made, and this is again maybe a hypothesis that I can't really ever prove, but it seems that the motion was trying to take advantage of earnings to do a major liquidity dive here and check the level. Thought of as like a spring. I know it's a weird thing to say that because you're like, well, it didn't just take off. I know. But in some ways, if it never makes another low, then it is a spring because this is the lowest. Like this would be like a phase B kind of bottom with a dip. And then you basically have a gigantic retest. And beyond that, do I think that it makes any sense as a spring? No. Like it's not historically what you see as a spring action, okay? And then you're like, well, what if it does come down again and dip low? Isn't that the spring? I thought you were talking about this being the bottom. It's complicated. It's not complicated in like a really heady way. It's complicated in like a time frame way. It's like, what time frame are you looking at? You know, which setup are you looking at? The short term, which already broke down. That was a little head fake we had. That's done. Are you looking at kind of the medium term where this could potentially be a range in and of itself right here? You know, starting on August 5th. Are you looking at the macro big picture, you know? So macro big picture, we've already kind of surmised. My theory was when we broke down on this distribution that we would come to the 470s area. And that's where we might have a change of character because that is right above where you have the major support. And that is more big picture analysis. Like, why would you do this here? Because you need to get below 485 for liquidity purposes. And then beyond that, you know, we could kind of look at short term and make different analysis about it. I guess my point is that it does benefit us to consider like things like waveform analysis and think about this in terms of layers, but at the end of the day, like that's going to give you like a sliver of information. It may not give you like the big picture, but it is important. So one thing I would look at is like, all right, short term, the bottom of this wave has that M, just like the bottom of this wave has that M. So if you're looking at the big picture, it's to your benefit to just kind of recognize those things. And then I'm trying to explain to you why I think this is going to be kind of a stopping point right up here. more than likely, because maybe, I mean, unless I'm like just completely off, maybe it is breaking out and it's just going to go. It just doesn't make a lot of sense to have no interaction with it when you think about the way that we understand like the sine waves, right, in the market, and the way that the market tends to travel along those is pretty consistent. So trying to take this as kind of a learning opportunity, just in case there's somebody new here who doesn't know what I'm talking about. This is like a wave, right? And then within the top, you're going to have another wave. And then within the bottom, you're going to have another wave. And it could look in a number of ways, right? But this is kind of making little birdies here on the chart. This is what I call M shapes, M crosses, whatever you want to call it. So this ends up being a creek cross down, and then there's like a bigger one here, you know, for the bigger picture. Cat's about to cough up a hairball. If you hear something wheezing in the background. So when you look at this stuff and you start to see that, then you start to think about even more minute stuff. Like you would look at this and say, so wait a minute, Booksy, that means that within this guy, there's also a little double top. And within this guy, there's a little double top. Yeah. And then within this guy, there should be a little double top. This is absolutely true. So it's a bit obnoxious because it just kind of keeps going down and down and down. But thankfully, there is a limiting factor, which is what? Time. Like, time does not allow it to continually shrink infinitely. It just doesn't. At some point, you run out of space. There is no more shrinking. Whenever you have these iterative moves, it just changes direction, and then that works itself out. So like this I would call like a compression action down, right? And then this I would call this like a expansion action, because you're starting to work out that right side, and that's true, but then sometimes when you get to this side, you see another compression. And this is where things get kind of heady, and you might think like, what's the point of all this if you can't be sure? Well, you can be sure, because at the end of the day, what you're looking for is you're looking for the M cross that breaks upward. So like we've talked about this a little bit lately, because it's really important to recognize the difference between a distribution and a breakout. And a distribution has the M shape just like everything else, but it breaks down. It doesn't break out. And the key here is that when it gets to that point, like for example, let's say it was right here. When it gets to this point, instead of head faking over your creek or making an upthrust and then driving back down, instead of that, you get a push over a support. And that's what a breakout looks like. That's like a confirmation on a breakout. That changes the dynamic of this, because you no longer have a, let's call it an outward working that's kind of iterating back down again. And it's just a liquidity question. Like, do I need to go back to get liquidity still? You can't answer that question every time exactly the same. It doesn't work. The question always is going to come back to a couple things. Like, one, did this get checked? Right? So like I would look at this wave and say like, did the major creek like check? And I would also say like is there a liquid support right down there? Meaning like, for example, and the way I drew this one right here, it's at like 494. It's kind of similar to what we have here, but it's not exactly the same. My point is like I'm doing a little illustration, but you can see it'd be like these tops or something, right? Like there's clearly like a resistance here. Did it ever check that as a support? You know, there's a lot of questions here. Like, did the creek check? Is there a liquid support? Did it already check that? Sometimes it does, and that's kind of what I'm seeing here. I'm not really sure. It kind of checked 475, But that would be like when it breaks out, did it have an adequate test here before continuing back to the top? Sometimes it does not. And you'll hear me say that I don't think it's going to go up because I didn't ever really test this. Sometimes there's no check. It just bleeds through it, and then you end up crashing back down later. And people are like, what happened? Well, there was no adequate check on a creek or a liquid support. So it wasn't proven. The move wasn't proven with support. How many times do you have to back test things, Booksy? Until the opposite side is done. I mean, the whole point of all of this is not just to go indefinitely forever and just keep checking things. The point is to exhaust one side or the other. It's actually pretty simple. You know, you will know it's done because you'll see the moves like this that indicate that you're not going backwards anymore. And again, it's like it does at the end typically just kind of bleed up. That's just the way it happens, because if this is like the last check, what else is going to happen? You're going to wave out. And this is where things get really exciting, because once those checks are done, usually like the last move is like this really big melt up move that goes back to the previous top, and then you end up in an SOS, and then you break out, you know. And that's the exciting part about the wave analysis is like, yeah, it seems like it just never ends, but it does end. You know, we've had exhaustion for a little while. Like our volume has been pretty low for a while, right? Everyone would agree with that. And in this, we had this really long kind of narrowing action at 5. At this point, unless we get like a hook here at like 511 or whatever, 508, whatever it is, unless we get a hook here, which would be bad, that would say like, uh-oh, this is supply, right? There's really no reason to worry. We've essentially exhausted this middle. We went down to check low liquidity. We're moving back up. I'm being genuinely serious when I say this. There's zero reason to speculate about a move if it comes back above 520. Because at this point, if this were to break above, I don't think it needs any more of these checks. I think you're basically at the end here. One person is going to look at this and say, no, we're going to come back down again. All right, maybe. Another person is going to look at this and just scoot it backwards and be like, we already did that. We just did this move down right here. That's what I'm saying. I think we did it. I think we basically did this move down, and now we're in this kind of period of like melting up. So why do you think we have to come back down that, Boxy? It's more about like, again, just kind of looking at the big picture. We haven't really tested that moving average. I think that 485 is a really important center support. I think that symmetry-wise, again, it's kind of missing. And maybe it's so compressed here that we're really not missing it. We're actually just leaving. And then the next one's going to be equally compressed. Wouldn't that be nice? You guys like, what does that mean? Well, like, this could be the right side that we're supposed to see, quote unquote. Wouldn't that be exciting? You guys like, I don't know what you're talking about, dude. Just speak English. Well, take this same iteration and apply it to the next level up, right? Like the next level up's here. You know what I mean? So if the next iteration is, and I might kind of mess this up, but if the next iteration is like, hey, we're waving up way beyond this previous top, that would be like us waving up way beyond the previous top over here. That's how it works. That's why it's really fun to watch it happen when it finally does happen, because it's like, oh, now you're starting to see that build out, that expansion, and it's going backwards to like these larger pictures. I'm not 100% sure that that's where we are just yet. But anywho, that doesn't mean you can't come backwards for something. Sorry, I clicked away from the wrong thing. So what I'm looking at now is I'm just wondering, I'm not sure. I'm wondering if we need to make that final move back, because it seems to be missing that wave back down here. So I suspected it would come up to about 508 to 511. It got really close to my marker. I think I put my marker at 511. I think it only came up to 509. Yeah, really close. Not quite there. Is it close enough? Maybe. The target's 511, I think. But whatever. Yeah, I think we could see 15. It's going to be dependent on what happens at 8 or 9. But it's looking pretty good this morning. So let's just take all that stuff I just said. Let's take it into consideration. Just think about if I were to come back here, like where would I want to go back and check? We already checked 477 area. Well, we technically checked 474, but that was the back test on the creek jump here. What about this level right here? This is 481. There's not really any chest on it. Maybe we don't need it. But we did kind of hover around 485. That was a level that on Friday I said, you need to come. It was really, it seemed serendipitous because I said the levels and then it happened, but I really wasn't sure. I thought it could be very likely going to come flush through because I was like, if this ends up being like a spring attempt, then you push up and then dump, that'd be really rough. But it ended up finding support at like 475 and then pushing back up to 485, which is great. It was exactly what needed to happen to recapture that dump. And then here we are. I guess the question is, where do we want to come back to if we need to come back? I would say this level makes the most sense, which again is 485. Does that make sense with, an SMA? Maybe. At this point, I don't really think it matters that you hit the SMA, that 200. Some of you are going to say, yeah, it does. I don't think it does. We've been running along it for a while. We've traded above it a few times. I think what matters is that you find support above it. Not that you hit it, but that you find support above it. So if we were to come back down at some point and find support at like 485, that's above that 200. It's just you can think about it like a float, right? Like it's just floating above it. That to me is support. What about this hit at 474? Couldn't that have been the backup right there? Again, it's time frames, y'all. Like, it's not really in the right spot on the daily. I don't really see any kind of back test, obviously, to the 200 or the creek. All I see is a single candle. So, here's what I think. Anyways, let's get away from this idea that I have to prove this. Let's just focus on what may happen here today. So today's Monday, September 9th. We have about a week, and then we're going to have FOMC stuff. We're going to have a lot of stuff coming out data-wise. So the theory was that we may be up around 5s because this gives us a sense of uncertainty. That's only if we don't run ahead of FOMC. If we run ahead of FOMC, there's really no reason for us to stay here much longer. Like, genuinely think you could just kind of take off. I know it sounds a little weird, but you could be up well above 550s by Friday. We've said this before, it doesn't always happen. So I don't want there to be a sense of like, oh, well, Friday the 13th, it's not going to happen, dude. It's doom and gloom. We've talked about this every week. It doesn't happen. Yeah, but eventually, if it's going to run, it has to happen. So if it's not going to run, it won't happen. But if it's going to run, it's going to happen. And it's really, for me, it's been a matter of like, is it going to be a run up before FOMC or after? So if you're running up before, there's really no reason to think you can't get 550 this week. That's a pretty conservative estimate if it's running before, like ahead of it. If it's going to run after, I don't really know why you would break out here. It kind of makes it a little too obvious. I mean, maybe that's the game here, is to kind of trap some shorts and then let them simmer for a day or two and then run it next week. I don't know. It seems a little too obvious to me. If you place it right here in the middle and you don't go above 520 just yet, there's a greater deal of uncertainty in that. So without having like too much complexity, I have a lot of complexity on this right here. I'm going to try to make a very simple version of this. So here's what I would guess would happen, right? We would basically have some kind of a corrective move going into Tuesday. Probably going to be close to, not necessarily 100%, but close to 485 by like Wednesday. And then after that, you're done. You basically start taking off going into Thursday, Friday. I don't know if it breaks or not. This is a hard question, but I think what's more likely to happen is that we end up again at 5 on Friday. And you guys are like, another Friday 5? Yeah. But I said this last week because it makes sense that it would crush a lot of retail's hopes and dreams again. And it leaves a great deal of uncertainty because you're going into a week that's supposed to be historically significant, and you're in a position now where you're basically sitting on a possible hook or a possible breakout. You're no longer within either of those creeks. You're below that uptrend support, but you're also above the downtrend creek. So it puts a lot of uncertainty into the gears. That's my estimation for what makes the most sense here in terms of like uncertainty. Okay. There's always a faster approach, which would be some kind of a lesser backup, maybe 496. And then instead of going back to 485, you just break out, you hold 5, then you break out again, and you go over 520. The simplest way to do this week for you as a trader, in my opinion, is to just kind of set that alert at 520s, see when it gets there, and then beyond that, I probably would just look at that lower range. I'm actually going to do that right now at like 485. And those to me are the big key levels here, maybe 487. We'll see if it gets there a little higher or whatever. Those are the key levels to me. So I wouldn't make it any more complicated than that. Make it pretty simple. If you get that break above the 520s this time, you're back above this thing. That's almost certainly confirmation of a run. Almost. You still need to have support. You still need to have that SOS build out. But I'm telling you, like, that's what we've been waiting for. 520, been saying it since early August. I mean, it's been a month. That's the level right now to beat. I think there's a reason for that they established that as the wall, because at this point, getting over it means, guess what? Now you're getting over that trend. Maybe this is a good learning opportunity too, because this is something that I probably haven't used to predict price action, and it would be challenging to do in the future, but there certainly is an intersection there, and it actually helps determine in some ways the timing of it. There was a sense in which this could happen in a very different way, and I had drawn out, if you guys remember that, I think I drew out like a pattern that went like this or something going into FOMC. I don't even remember, right? And I figured we'd be here around this point if it were to delay. If it was like higher up, I did like a weird outward motion higher up. I'm sure we could find that chart if we need to, but the concept of that was like, how do you delay it until that point? But it was still, a lot of it was still dependent on some of these trends. Like I had these parallels drawn, and it was based on this major uptrend that we have. And looking at it now, it's like, okay, well, it does seem like that's the squeeze point, right here. And that's on Wednesday, which is just, again, an intersection of the supply level, which is at 520, and then that uptrend. Technically, it's more like Thursday, but whatever. You get my drift. So you've got like a lower wave here, push up, and then you're going to be right at that point of intersection. So it should be a good learning opportunity for us, I think, as well. I think there's definitely an opportunity there to take something from that. Let me get rid of this. I'm going to use this one instead. Like, what would you take from that, Booksy? Again, just the idea of intersections and like it matters as well. I mean, it's funny how this stuff works, but this is kind of cool. So the angle at which they went downward, these operators, this is a 67-degree angle on this chart, okay? Probably going to have to adjust this because I think I did it a little differently. But if you use a 67-degree angle right here, look at where you intersect that region. You see that? The angle at which we went down in that downtrend and the reactive angle in the uptrend, it takes you right back. I mean, it could not be any more clear. You just saw me do it. I'm not trying to like hoodwink anybody. It's just crazy to think like, hey, we're going to pull down and it's going to look like this. And then you can see like that measurement ends up being right on that spot right there. Right there. So it's pretty crazy, you know, like there's a very mechanical nature to the market in a lot of ways. So the way this measures out is it does get you right into this pocket going into Wednesday, which is September 11th. The theory behind that, I don't know, you know. Again, I think it's sine wave theory. It's just pretty straightforward. So there's really only two things that happen now, in my opinion. Well, maybe three. One is that for whatever reason, this is indeed like a spring action, and we do need to come low for a better spring. Technically, we already got 461. That could have been the spring. It's possible there's going to be another one. It seems a little odd, but on the big picture, if that's the bottom, there could be another one. I don't like that idea necessarily, but it is what it is. The other two options are that you pretty much continue in the same way and you end up at 5. So then there's really only two divergent paths from there. This is either going to be a backup to the creek and the creek jump and it's going to take off, or it's a distribution and it ends up breaking down. You might be saying, well, what if it just takes off and it doesn't even do this? What if it just goes? You're not even thinking about that. No, because that's like pretty straightforward. I mean, if it just goes and you're just looking for that support and continuation, do I want it to just go? No. Why not, Booksy? I'm bullish. I'm loaded up on bullish options and stuff. You got to understand, I wouldn't ask for something that hurts me. So you have to understand, like, it's not because I don't want it to just run, but I'm very hesitant to enjoy moves when the operator doesn't do a back test. Even in that May move, I would not have enjoyed that move if it didn't come back down to like, well, whatever it was, like 320 or whatever it was at the time. It had to make that back up. It had to. And the proof is there. I mean, it did make it, and then it was a very successfully huge move. So I don't like the idea here of taking off above 520 again without adequate buildup. I think if we get adequate buildup, we're in a much, much safer place to just say, even to just speculate about upside, but to say like that could be potentially very, very, very strong going into FOMC week is not a lie. Like, it's a really good place for us to be going into that week. So I don't like the idea of taking off and not having made those checks. At this point in the game, we've waited this long. I'd rather just do it right. And again, it's not because I'm not bullish. Like, I have a ton of bullish options on AMC. I do not want to see this thing crash, necessarily. If I do, I'll have to get out of those options and take the loss. But like, I'm genuinely think this is going to go up to at least 8 or 9, and then we'll see if it can double that value and go up to about 15 or so. speculated further than that, but we'll see. Other people have said much higher. My point is that this particular like setup has a really strong picture if it goes ahead and makes that back test. If it does not make that back test, I can't say it's very strong. Like we would definitely be at risk of like piling back down and having some weird, I don't even know. Maybe it's a fake out, but it would be gross. You have to understand, like pushing above this top early would be really scary because that could just be like a UTAD, especially if it left a bunch of stuff open. And you don't want to see that. Like you don't want to see it test this again and then fail and come back down. That puts so much fear in the market. You guys are like, that's what's going to happen then. Well, that's my worry. That'd be like my least favorite scenario right now. So it's much better for us. Much better. There's a lot less questions. There's a lot less stress if we go ahead and back up first and then advance. Simple. I'm not saying it's not possible to just take off, go to the moon, run 200% in a day, or whatever people want. Those things happen. They happen on AMC sometimes. Crazy stock. Really is. But if this were anything else, I would be like, let's just see the backups. Let's see the creek jump right here. Because that's what should happen. Like this should be a little wave right here in and of itself to get over this top. I'm kind of even curious if that even manages to get there if we don't just distribute right here and just kind of head back low. And by FOMC, we're back down to this that unusual, you know. It's not where we are as much as it is how we get there and like whether or not it's healthy or not healthy by that point. Because both of these could be healthy and they're basically the same thing. They're a wave up, wave back down, wave up, wave back down, wave up, wave back down. They're all kind of identical, aren't they? You're noticing that pattern is exactly the same. Well, they are. The way these become distributive or bad is with things like head fakes, with things like false breakouts, you know, that can't hold their supports. It's okay to push resistance, but then you don't want to slide back down through supports, right? If I'm going to waste a lot of time and delay like they have been doing, this lower option and coming down to like the 480s may even make the most sense, you know, and just really slow churn down. Why not? You know, I've been speculating quite a bit this morning, but the big picture here is really simple. There's a small wave right here. I think it needs to complete. It hasn't completed yet. So the next time we kind of get an adequate backup, again, I think it's going to be going into about Tuesday or Wednesday this week. I don't think it's going to necessarily all happen today. That would be pretty crazy. I'm looking to see where that support is, and then if it breaks, we'll be looking at 520s. That's important. If it doesn't break here and it ends up distributing, it's probably going to be, again, after like a backup, you'd have like an M top, and then you'd end up dropping it at like 505 or something instead of continuing upward. It's just pretty straightforward to me. You'd end up with like another little fake out right here. Instead of advancing, you just drop and then you come back down for a retracement back to these creek levels. And probably again, then you're going to have to reset it. You have to look at another little wave. And you guys are like, this is really annoying, Booksy. Yeah, it is. But that's okay because we're at this point right now where we're worked out. We worked out so far everything we need to work out, I think. And this backup, even if it does come back down to 480s or something, I think it's fine. I think, again, it almost is necessary. You could see why on the bigger picture. So that 200 SMA, it's curling up finally. It's been really downward facing. It would be nice by Wednesday if it's kind of flat here. That'd be great. I think that would be really positive for us. We'll see. Give it a couple days. It's not going to be like necessarily today. The 200 on the SMA on the 4 hour looks pretty gold. It looks like we checked it right here, didn't it? And again, a backup right here would not be breaking through it. It would be probably meeting it again. Those we talked about the compression of the 90 and 180 on the 4-hour and how they are more compressed than they'd ever been for the longest period of time that I could find. They were like within a penny of each other, not a penny, but like percentages of a penny within each other. And then this drop really pulled them apart quite a bit. So now they're sitting at 493 and 497. That's okay, again, as long as we see that 90 cross up over the 180. It may not do it until after the fact. These aren't always leading, right? So sometimes it's more of a confirmation move that like we are indeed at a bullish move. So still, we may see one more shakeout here. Right now, they're centered around 495. So if you were thinking about this as like whipping around 495, you take 509, you draw this down to like 495 center, and it looks like that 50-50 goes around like 483 or so. So again, it makes sense to me that that might happen for a lot of reasons. So that seems to be the hot zone at the moment, is like 480 something, 483 or so. Could just take off though, Booksy. Yeah, maybe. Even still, like 496. Yeah, I gotta say, I think 496 and 483 are probably the best numbers. They keep coming up. So those are the ones I'm gonna pick out. We'll talk about GME. Get off of AMC for a minute here. I really want to talk about MPW because I found out something that I'm like dying to examine, but I'll talk about that a little later. How long till 8 or 9? So if it breaks, you're going to be seeing that sometime around the Fed meeting or before it, which is only within a couple of weeks. I don't think it goes slow at all. We've already done the big picture analysis a couple times, and yeah, there's a pretty strong chance that if it did break early, that it's going to be there Wednesday, the 18th. This is the way we measured it out. We used some really specific measurement tools, and this is the big one right here. This would be maybe the best timing line, this purple one. And I'm very confident that this is as accurate as it's going to get. It is a trend from the bottom two areas right here, but it also meets all the other criteria that it needs to meet as the midline for this wave. So in theory, it gets there again on FOMC. I mean, I don't really know what else to say except that it's right there. It's at 760s or whatever FOMC. If for whatever reason, again, I've got this right chart drawn out low, like this is not breaking out until then. So it's like, well, which is it? Yeah, I don't know. I for a while I was like pretty confident, and I kept saying it. It's like the door is open, the door is open. We might run ahead of FOMC. It would make sense to me to already be up there, just kind of run it before, and then use that to trade the last bits of news. If you're looking at specifically like an average, I think the value here at around 860s is probably a good one to use, and that's really early October. It's not that complicated. This is basically the same move, just scooted over. So I would say that it's pretty likely that we're going to be at around between 8 and 9, maybe 850, 860. I think is the number that I had was 859, but whatever. That's not the most important part of this. I think it's very likely that we're there before October, or like on October 1st or 2nd, something like that. Okay. Going into October, I think we're going to be up there. You can't put the cart ahead of the horse, though. You can't do that. I mean, you can, but the horse doesn't, it's not a pushing vehicle, it's a pulling vehicle. You know, like, you're going to shoot yourself in the foot if you put it too early. So yeah, I think there's a decent chance that we're up there by either FOMC or between, like, let's just say between September 18th and October 3rd or so. It's October 3rd. Yeah. Cart before the horse means you count your chickens before they hatch. There's another farm analysis, or not farm analogy. You guys are like, I'm not a farmer, Booksy. I don't know what that means. Hopefully you've heard that before. Essentially, like, until there's a confirmation of this breakout, there's really no reason to say that it's going to go to 8 or 9 for sure. Like, you can speculate on it, you can do the analysis like I've done it, you can be very, very confident and trade it, but I've maintained for the most part that this range has been largely bullish on the whole, that there's not really ever been a major change. There's been 2 up thrusts here that have caused concern, and that's about it. So, am I bullish on this? Yeah. Do I have bullish call options? Yeah. Did I think it was going to come to 8 or 9 ever since, July? Yeah. Has it happened yet? No. But, when we did the P&F for it, I think it really helped put things into perspective. The point and figure chart, we did the measurements. They averaged 475. Like, it was really a good experience for me because I never did point and figure, so it's fun to learn it. But then to look at that and say, look, it's the same numbers that I've been getting, and that at this point, because it's traded for such a long period of time, it has an adequate cause built up. And that's the idea, is like cause and effect. If it had left in July, there would not have been that cause built up. It would, the P&F, the point and figure, and I know that's not the end all be all, and some of you guys are like, well, I don't really care about that, I don't think that's the only thing that matters. It's not the only thing that matters, but just by itself, it's a proof, right, of some kind of evidence of cause and effect, and it does work pretty well. If we had left in July, I don't think you could have looked at that P&F. It would have been like half the amount. It would probably have only supported that 750. Remember that inverted head and shoulder target we got? That was like 750. Like, it might have supported 750. It would not have supported going to 15, period. And everybody's like really into the idea of like squeezes and stuff, and they do happen. And I'm going to talk about MPW as a squeeze candidate, by the way, because it's on fire as a squeeze candidate. But like on fire. But I think it's important to note that, like, when the action looks boring like this, it's building like momentum, it's building cause. And you have operators, we talked about it, we have operators that had bought in like 20, 30, like 10s to 20s to 30 millions of shares. Like, it's not a small amount. We looked through the Fintel reports in detail. I mean, we got Vanguard with 30 million, BlackRock with 20 million. You've got Mudrick Capital with like 20 million. You got a handful of others that have like 10 million. I mean, there's a lot of institutional pressure here to push this thing up. There's a lot of institutional support. And it's been built up over a long period of time. Specifically, really around that 520 down to 485 area. That's where a lot of the trading has been. So when I look at this big picture, I'm like, that to me was a huge, huge checkbox. Like, it's got enough momentum to get up there from a I don't know what to call it. It's almost like meat and potatoes kind of perspective. Like there's this sort of base understanding of stocks where you don't have squeezes, you don't have weird things happening. It's just supply and demand. It's just what has been built, what has been traded simply as shares, and that's it. And I love that because it's like that's the most basic understanding of the market. I know people don't agree with that. I get it. But like that to me is a huge deal. That's like foundational. So the fact that based on the time, not even the time, but just the amount of trading that's happened, this has that adequate support, the cause built up. That's a huge deal. You don't need a short squeeze to get to 15. That's a big deal. That's amazing, right? Like, you don't need it. That's kind of crazy to think about. It really just is determined based on whether the operator is going to do it or not. And that's really what the analysis has been about in terms of like interpreting the volume, interpreting the price action, interpreting the waveforms. We don't do sine wave analysis because it's, I don't know. I mean, it's not easy, but it's like you do that stuff and you can get it wrong, but you're trying to understand the path that a operator is taking and why they be taking it. So I think the fact that we've kind of boiled it down to 1475 was definitely the average. I did 3 different targets with 3 different setups on PNF, and it averaged to 1475. The lows were like 1310. The high was like 16 something, 1616 or something. It was really silly, like a weird number. And then the middle was like 14 or something like that. We averaged them, they're 1475. Pretty decent average, right? It makes a lot of sense. It adds into everything else that we've talked about because it's a very simple, straightforward understanding of like what was going to happen, which was we go back up and we would push that outer creek and probably reject. That was my understanding of it. And that should happen over the previous top. And ideally it happens honestly below 1380. I don't really want to see it go way above there. If it does it in extended trading hours, that's fine, but I don't really want to see it during regular trading hours if we can avoid it. And we'll have to work through that when we get there. There's reasons that I think that, but it's not the end all be all if it does. So I said I was going to talk about GME, but yeah, Allspring Global is kind of the biggest short right now. They have 340,000 in short position. Vanguard still had 250,000 in short position as of August 27th. Would not be surprised if they don't exit their short positions again completely, and instead they hold them, because I think we'll probably come back. I genuinely do think we're going to come back down. It may not be like this where it goes to 8 and then comes back down. I think it goes really high and then I think it's going to come back down, but I don't think that necessitates them getting out, is what I'm trying to say. They didn't exit at all back here at 480. They had a 350,000 short position here to here. They've exited over 100,000 in their short position of shorts here, which is significant. Allspring Global, whoever this is, they haven't touched their short position as far as we know. They would be the ones to get squeezed more than likely. I think Vanguard, if they saw Vanguard exit first, they might rush to the door. But, yeah, I mean, it's significant. If you think about that, plus all of the shares that are owned, there's definitely a reason to pump this sucker up. Pump it up. All right. So, slight contradictions on these charts right here. One of them looks like it pushed above. The other looks like it did not. I'm not particularly concerned as long as it didn't go over the previous top right here before making kind of an effort to find a support. Really, it looks like a kind of a rising wedge almost on GME. I'm talking about GME now. I'm seeing at 2390. It did hit 2310 again, and it seemed to find support there. So on the greater picture, am I happy with that? Yeah, I talked about 2310 quite a bit. I'd like that it didn't immediately push to make a higher high. I think that's actually a really good thing, because if it had, and we had it like a nasty bearish divergence or something, I'd have to be like, well, this is not good, I'm not seeing that. It stayed lower. It looks like a good consolidation. Definitely looks like 2310 was the key level here, and I've been very adamant about that, because not because I invented that level, but because I just see it as a very important level. It's the bottom from it's the bottom support from really June, maybe even going back into May. It was acting as a supply back here, but it's in my opinion, it's kind of like that main whip around level. We broke out of that big creek coming down, but the reason for that is because going backwards in time, just to recap really briefly, for over a year, going backwards from June 2023 all the way back to, I think it's January of 2022. Yep. And all the way back to there, it's been consolidating as a really major support and or supply. So it's an extremely important level. The low end of that level is 2310. So that for me was like an important mark. It also seems to be the level that we chose as support. We hit it like 3 times basically on the bottom, 3 times as supply, 3 times as demand. Then we broke through it. Now we're checking it out again. We're kind of wrapping around it. That makes sense. So I think it's the one that I chose it because I thought it was the most important of the 3. But there are a few others. Like one is at 2460, and then the other higher one is up here around 26. So if you're looking at this as kind of a range, you would say 2310 to about 2610. You could just do a $3 range and say that that's where the whole thing is. Very likely it's going to need to meet all 3 of those at some point as support. It's going to have to jump over and hit 2450. It's going to have to jump over and hit 2610. Okay. But I've been talking about 2310 as the key breakout level for a bit, mostly because of the big picture, like the huge analysis on this that I did. I haven't really recapped this in a minute, so I'm going to gently recap it. Basically, there's a number of ways to kind of look at this gigantic chart, and certainly like this is not the only way to do it, but this is like my waveform approach to it. And this is what I've determined as most important. There's a particular trend line that was established at the very beginning of this stock way back in January of 2003. It was then broken December 2013. So 10 years, right? Almost exactly 10 years of uptrend, essentially. It's really just a gigantic wave that wraps that line and breaks it. This is important because when we squeezed in 2021, we ended up back on that marker, and then when we came back down, we established a trend bottom. And looking backwards, it may seem a little silly to do it this way. You might be like, there's no trend there, Booksy. That's the weirdest thing I've ever seen. You have to understand, like, I'm not looking for, when I look at this kind of stuff, I'm not looking at tops and bottoms necessarily. Like, they are there, they're present. It's more about what is being established as the trend to beat, right? This is the trend that you either hold it or you don't, and it didn't hold it. The M cross right here that happened in 2009 going to 2012 says it all. You can see the interaction right there, and then the rejection when it comes back up in 2013. That's the bull trend. There's a bear trend that's going down, but that's largely been lost. And the only other thing we can use as the bear trend is really the original kind of creek value. Again, I think that one likewise was met here. So this is an intersection of a lot of things on that pullback in April of this year. It's a really big deal. Going forward, you can see that the parallels then, they actually make a lot of sense, because on the walk down, you're establishing potential runs to the upside like continuously. Like you You can see I've already marked them off. I'm just going to kind of trace through them. Like one of them specifically about halfway, 2016. That one's really important. This is like the middle M of this downtrend. That's the midline, okay? And then the big breakdown happens at $3 on the chart here, which is in December of 2018 going into 2019. All right. That's not surprising because that intersects the original opening values of GME, right? This whole thing looks like a gigantic, I mean, strangely enough, looks like a gigantic accumulation, even though the argument was that it was going bankrupt or something. It's really weird looking back on it now because it's like, you know, like I know it was distributing, but it certainly looks like it came back down and made like a spring, doesn't it? And then just took off. It's really odd. Right. So this would be like a backup and then a second attempt to race up. And either going to be a distribution where it comes up again, tries to distribute again above 45 probably, which is what happened here, or it breaks out and it heads to like 200s again. Well, once I found those trends, I used some basic stuff with like fib channels, I guess, is what I was using at the time. And I picked out the ones I thought were the most important. And that middle line, which is the 50% between the top and the bottom here, ends up being right where this middle is here. So it breaks down at the same spot. And in that way, this motion, which comes from 2021 highs all the way through 2024 lows, really looks like it's trading the same channel as, and it is, you can see it visually. It's trading those same markers as the walk down from 2013 to 2019. Now, is it doing it faster? Yes. It's almost a more compressed version of the same exact thing though, isn't it? Like if you look carefully, you can see it and you're like, oh yeah, it's pretty much the same, you know, in terms of that walk down. It's just that the way in which things are happening, they're happening in a way that's obviously very like compressed, right? More volatile, I guess you could say, at the same time. So is it good that it went up instead of down, Booksy? I don't know. We don't know yet, you know. This went down and then pushed up. This went up. Is it going to drop down? It could. It's hard to say. But what I can say with relative certainty is that this also confirmed in my mind that 2310 area was of utmost importance, this little middle range, because this is where the middle breakdown happens. And then going just to a simpler approach, when you look at that as a possible bottom, like this whole thing, and I'm going to go to like the daily now, get rid of some of that noise, I guess. I got a lot of chunky stuff over here. But yeah, if you look at this as a potential like bottoming action that's breaking out of a wedge, there's channel lines that come down through here, and these are the creeks, and this is what we've been meeting up with when we're back testing here. But this would be very simple if we just drew it like to the side, right? We would be like, oh yeah, I could see it. If you saw a walk down, let's say it's on this green line, and it was just really long-winded walk down, and then you broke to a low, you made a little spring bottom, and you broke out here, right? When you come back, you would not want to, you wouldn't want to lose this line. This is exactly what it looks like right here. You'd want to hold that so you could continue on. This is basically identical to what this chart looks like, but on a bigger picture, I guess. So in order for us to like leave, you'd have to find that support again. It makes sense. It just does. I wish it were as clean as this because this is a little weird and like flat. It's essentially the exact same thing. You would expect for this to be the creek jump that also finds the support. This last little guy. So we're in this kind of a last little bit over here, I guess I would say, if I were using this as like a demo. And if you're just listening, I can't really explain it except to say like, this is a push up that then demands that you hold the support at 2310 as it crosses the final creeks. We did cross the final creeks. That happened. We had a whole series of conversations about that. I drew all those creeks out. You know, here specifically, like these pink guys coming across and these blue guys coming across. We're outside of that for now. We've been outside of it for a while, ever since about August 14th, which again, that's the same date that AMC jumped the creeks. And we said it had a change of character, remember, on the 9th and the 12th? It's the same time that GME jumped. It didn't seem like it because we didn't see some massive explosion, but it absolutely was that area. So some of the other theories that I had proven to be wrong, absolutely. But that time period is really important because of what it signifies. And now you're on the oopsie, I got some weird thing selected, I guess. Yeah, I don't know. Now you're on the possible race back up. There's still an issue around 29 to 30. I had this kind of drawn out pretty quick. And looking at where it is now, it's like, it's sort of the same exact problem, just a different day. And you guys are like, well, that was wrong, so why would this be right? It's not really when it hit there. It was really like the fact that it hits there. And I think that looking at where it is now, it's actually almost more of a problem because of these purple trends. And that's the low. I guess on this other example, it would be like, I didn't really draw it, but it would be the other creek that you don't see. Like right here, it'd be this guy. Right here, there'd be a cross. That's the purple one. Okay, so like that particular area is an issue because you got to get back above that. Once you get above that, you'd be in good shape to kind of continue up. And then you look at the big picture and it's like, oh, and everything else kind of just clicks. It really makes sense that you would come back up to the 40 to 50 area because that's right where that halfway point is. There's going to be some contention there on the major channel going up. That's always been the point of contention. So if you can find support above this 23 to 26 range, you should have a good push all the way up to near 50. Pretty easy. What about further than that? Why not go farther, Booksy? Yeah, we'll see. It's sort of like what happened with AMC. It's like, could it go farther? Yeah. AMC, we're thinking it could go up to 15 or so, maybe higher, maybe a little higher, maybe a little lower, right? Maybe 1380s. Those targets in that little pocket from 13 to 16 signify kind of like a doubling value of the lower pocket, which is actually like 8. So if we're looking at like bare minimum, we would say 8. If we're looking at more maximum, we would say 13 to 16. I know that stands in contrast to what other people are saying about 20s to 30s to 40s, whatever people are saying. All I can say is I can't convey to you something that I don't observe. So although I do see that as a possibility because of certain target levels, we found them other ways. Like I know where they're coming from. It's not possible if I can't observe it for me to comment on somebody else's TA like that. Like, I don't know. If I can't find it with adequate reasoning, then I don't support it on this particular channel. It's not because I don't think it's possible. It's not because I don't think it's even probable at some points. It's just because if I can't find that and I can't observe that, I'm not going to sit here and peddle that to you. Like, I don't think that's what's most likely, so therefore I'm not going to do that, okay? So if you're wondering, like, what about 20? So-and-so says 20. So-and-so says 30. Okay. Look at their information. Decide if they've put the same amount of work that I've put in. If they've put in the same amount of work or more work than me, then consider it. It's not about, like, how much necessarily effort you put into it, but, like, it is important, you know, when you're looking at TA to say, like, is it reasonable for more than one reason? If somebody has a target and they only have one reason, they might be right, okay? They might be wrong. But think about it in terms of probability. if you look at one target and you have 5 or 6 reasons that that would make sense, and you look at another target that only has one reason, and I've done this before for myself, like, hey, this only has like 1 or 2 possibilities, this has like 5 or 6. The 5 or 6 possibility is always going to be the one that has the more, I don't know, common sense, the more reason to it. That's always the one I go with, because that's the way of protecting myself against risk in the market. So the more evidence that I have for a particular target, and I've never gotten away from 15, y'all, like never. I have tried. I have done everything I could possibly do. The only time I got 20s was really early on during that initial pullback. And ever since then, the price targets have kind of come a little bit lower, more reserved. And you've been following me since the beginning of the year. You know it's true, because the beginning of the year was like, yeah, looking at 14s, eventually coming back to 14. And then it happened. It's like we're still at the same exact spot. Like nothing, and it just, when you have a really good target grouping of targets, it just makes sense. And you can always have that outlier scenario. But I'm telling you, like, I've come up with dozens of targets, 20 to 30 to 40. Those are like outlier scenarios for me. So look at what someone else is saying. If they're saying 20 and they're doing one thing, like they're drawing a fib and saying it's going to go to 20 because of this fib. Okay, is that a good reason to go to that target? Well, historically, fibs are good at, fairly good at predicting where we might stop. You're never really sure. Is there other reasons? I don't know. Take those into consideration, because sometimes people say stuff to me and I'm like, I don't know. Like, I have no idea what that person did to get that target. Do I think it's a reasonable target? Maybe, but I could find it, but I don't necessarily think it's the best target. Okay? So if you're somebody that thinks you're going to go to 20s, I can say with absolute certainty that I'm not certain. You guys are like, I hate that, folks. I hate that about you. It's not about confidence. I have way more confidence in my targets. I have much less confidence in those targets. So, yeah, it's about the fact that I said it's not about confidence. What I mean is, like, I don't lack confidence. I lack confidence in that target. And there's a difference. Okay? And if that person has confidence in that target, find out why. Don't just settle for here's a number. We're not in the business of throwing out numbers. Like, it's not the magic 8-ball business, okay? And that's not a jab on anybody. It's just to say, like, that's not TA. Like, that's not technical analysis. Like, there's always more to it than just one thing. Why is this annoying to some people right here? Because it looks like I'm uncertain. I'm like unwilling to pick one. Really, I think these two are more probable. These lower end ones are more probable. If the higher end one happens, that's cool, but I'm just going to go with what I think is most likely, But all of these are possible, and it's definitely like important to explore it and say, well, which one has the most credence? Like, which one makes the most sense on the whole? If you take that kind of a measured approach, whether I'm here or not here, whether I'm streaming or not streaming, doesn't matter. You own that approach, you're going to be fine. Like, in my opinion, you're going to have what you need to be successful. Just don't take what people say at face value is what I'm trying to say. And that includes myself. I do labor at this because for myself, it's a little bit of an assurance. Like, I want to be sure of something, as sure as I can be about something. If I'm going to put money that is essentially taking money away from my family, if I'm going to take that money away from my family and invest it in something, I want to be darn sure as I could possibly be. And if I'm wrong, I'm wrong. But at least I did everything I could to be as sure as I possibly could that investment was going to pay off. That is not the same as and I'm not trying to, again, it's not a knock on anybody, but I've seen it. It's not the same as a young 20 some odd guy who's got a good job, who's got a lot of extra cash to throw around doing YOLO plays. It is not the same. Okay? It's just not. It's just not. Like, so my approach, I don't feel like it can even really be compared in some ways to some other people that come on in like YouTube stuff. I'm not saying that everybody's like that. I'm not saying that being young is somehow bad. It's not. But there's a lot of younger guys that came into this scene that are still here. Some of them aren't. Some of them are. I'm not sure whether they had the money to lose or not, but they didn't seem to be, that concerned with, I don't know, like feeding a kid or, you know what I mean? Like paying a mortgage. Like a lot of these folks were just young dudes who were trying to get Lamborghinis. That's not what I'm about. So hold that against me. Like, well, he's cautious, but he's obviously cautious for a reason. Hold it against me, you know what I mean? That I'm not willing to good. I'm not willing to say it's going to go to 20 or 30. Good. It should be held against me because I hold it against myself to take responsibility for my money and make sure I'm not screwing over my family with less than 100% of my effort. You know what I mean? So I'm not saying that standard has to apply to everybody. I'm not saying that standard even has to apply to you. You may not be in my life situation. It may be completely different. But take that and then think about when other people say 20 or 30 or 40, think, yeah, all right, they might be right. They have some decent evidence for it. There is some TA that backs it up. Are they concerned about the things that I'm concerned about? And you ask that for yourself. Is this person concerned about my money? Are they concerned about feeding a family? Are they concerned about this or that? Because it might be that the proclivity that they have is not to protect their income in the same way that you would. And they may be looking for like a big cash out for a different reason than you. I'm not saying question motives necessarily. I'm just saying consider that, because the idea of a YouTuber is already kind of stupid, and suspicious. Like I'm in that group, right? Where you're like, why in the heck would I listen to this guy just because you have a microphone? I get it. I do. But just be cautious, okay? So when I look at this, I'm like really reassured that this could go up to about 14 to 15. When I look at GME, I'm pretty assured that it could go up above 40 to 50. So now I'm going to pull this back. I'm going to rein it back in, get off my little soapbox here, right? And I'm going to rein it back in and talk about why I just said all that. I said all that because GME has had a different outcome than AMC when it comes to that second move in the past. The main example that we have is indeed the original run-up. And GME did not exceed the original high on that first run-up. And this is important because it really depends, again, on your outlook on something like AMC. If you think, and I've made this argument on the big picture, if you think that AMC might be at risk of coming back down to 3 again, because on the big picture, it definitely looks like it could be a huge year-long bottom forming. If you think that AMC might have a phase B top and not break the creek, so if you think it's somewhat more reasonable that it only comes up to 13 or 14 and then it comes back down to whatever target, then essentially what you're saying is that you think that AMC is kind of iterating the same thing it's always iterated. Like it's still doing the same thing, but it's doing it really low. And we talked about, briefly, we talked about those waveforms. And that's exactly what I'm saying right now is like, this idea that your waves are waves within waves kind of thing, right? And that when you get to the lows, your expectation would then be that you're going to do something similar on this bottom that you did on the big picture, that you've been doing on the big picture. Because if that's the case, then this push up could just be like kind of like a wave out, right? And you would expect there to be a up, down kind of motion to it, not just straight up. If that's the case, absolutely you're at risk of coming back down to the bottom again. It's not even a question. It happened in 2020. That's a great example where it had this big push up, looks like it's going to break out. The market took off, right? AMC did not. It has a phase B top in 2020, and then it comes back down for a spring. It's a good example because it shows essentially the same thing that I'm concerned about, which is that you may be in a position where that could, you could break out and go to 20. But if you don't go to 20 here, it really doesn't make any sense to think of this as anything more than a potential second top, like a phase B top on this support right here that could then come back down. And this is the exact same thing that happened in September, oddly, right, of 2020, August, September, and then it came back down. This is where the market really started to recover very well. And we're not even in that same situation right now. Some people think the bigger market's going to rug pull while small caps kind of rally. The point is this iterative motion here started with a major retracement back to, it's an auto reaction in a phase B, right? Back to the supply. And we're seeing something that could be very similar. So if you think that's even a remote possibility, then you'd also have to consider the fact that GME didn't even make a second run. And on the big picture, it may not make sense for GME to advance past like 40 to 50 right now. That bothers a lot of people because then you're like, well, what are you trying to say, Booksy, that GME is going to be a losing play? No. I mean, it's still a huge move. Right? If it goes up to $50 or thereabouts, it's over 100%. You're like, that's not enough. Okay, whatever. I can't tell you what enough is. All right. What I can say is that if it doesn't breach this level, pretty much right around like 47 down to 41, this little pocket right here, it's not going to have a chance of advancing to 86. I'm pretty bullish about the idea of it going up high to like 86 if it does something similar to AMC. I just don't have evidence that it will. You guys are like, what? You just said you did. Look, I have evidence that it could go up to that 40 to 50 area. I have a lot stronger evidence about that than I do 86. There are some really key intersections, but they're like near November. So it would imply that you push up and then maybe come back up again later in the year. Could AMC do something similar and actually break out and go to like some high level around the 20s or 30s? Sure. There's all kinds of stuff that could happen. But I want to say that like right now, this particular section of the chart, this 40 to 50 area, if I'm just looking at the iterations and how they've played out on GME, technically that's more likely. Like, it's more likely it doesn't go. It only goes up to like 50, and then it comes back down. And it probably at that point, if AMC's coming back down low, AMC might go down and make a new low even. That's what happened in the big run-up. AMC came down and broke new lows. GME didn't, right? It may only come down to like 17 or 16. Why? Because that's, again, and if you look at the bigger picture, that chop down never has a new low. GME also likes the double bottom, So even if GME came all the way back down to 12 or 13, it may never go lower than 10 again, And again, you just have to look at like what's happened before is that this pushed up and then chopped slowly back down. If it pushes up and it chops slowly back down a specific number, right? On this trend, if it does the same thing again, it's going to come back to like 13 and then it's going to break out later. If AMC does the same thing again, it's going to come back down to frankly, if it just kept doing the same thing it had been doing, it would probably come back down to at least 240 and then maybe even come lower, because that's the pattern here. This broke out and then slid all the way back low, you know. So it's a measured approach to the two charts that comes from a place of caution, but also just the pattern analysis as we see it. I don't think that it's necessarily what's going to happen, because technically, AMC also needs to have a change of character, and it hasn't really had that yet. So on the big picture, okay, this is the bottoming of a gigantic wave. I see it on my chart right now. That means that there has to be a change of character in here somewhere. There just does. However, it does not mean that the change of character has already happened, and it doesn't mean that it has to be necessarily, again, iterative. So it's kind of like a double-edged sword. It's like a change of character is exactly what it sounds like. You're not doing the same thing you've always done. If the pattern here is always to kind of push up and then come make a new low, push up and come make a new low, eventually that's got to break. It could be as high as this next iteration we make. We may not come down below 350, and that would be a change of character. We might do the same iteration again, and then, you know what I mean? Like, you don't know till it's finished, but it will jump that big creek, and I just don't think we've done it yet. So I see this as the most critical intersection that we're going to make this year, more than likely. And it's at this 13 to 14 pocket right here, major intersection, right? And I genuinely think it's about the middle of this wave. I mean, the way that I have it drawn out, it looks like the middle is, essentially like now. Like this is the center of the wave. And you might be saying, well, that's good, right? It's mixed. Like it's a mixed bag, because the middle doesn't necessarily mean it's the bottom. Why not? It just doesn't. It's just the middle of the overall picture. Like the middle of this wave on the top is over here somewhere around October 2021, but it technically got higher. I mean, that's the high, right? It should have been the high of the wave. No, that's not really how it works, because markets don't run in a perfect wave. They whip around their waves. So they're always like there's always a sense of like you're not quite sure that the high is actually, it's almost never like the center of the wave. We see this on the short term too. Like we're looking at it right now on the short term, and the center of this wave is not the low. Like that's not the low of the wave. Odd as it might sound, it's just not, right? The center of the wave would be where it jumps the creek, which is actually like a couple days later than that low. So that's more likely going to be the low here. And that's just the nature. Again, sine waves, on a big picture, they might look pretty tight, but you look at the nitty gritty, you're like, no, they're not really. Like if you look at this, you're like, well, look, Bugsy, see, you can put it like right on the middle. It really has more to do with where that wave jump is. And I know this is kind of confusing, but it's like, I could draw it however I want to draw it, but I don't think that the wave center is actually, it's almost always better to put it on the creek jump than it is to put it on the low. And mainly the reason for that is because if you look in the past, we've had waves that have lows after the center of the wave. It just happens like all the time. I don't know. It's not a really great way to prove it, but maybe looking at this upside down could help. You know, when you look at this wave up and you see like, that's definitely the middle, of this motion right here. But the high is the August 23rd top, right? It's not actually like where this kind of jumped over the creek, which is where the middle is, which is around the 15th. Like the middle is much closer to the creek jump than it is the high or the low. You can flip it upside down, and just as an example, like that's what I'm saying right here. So like sine waves are smooth. They're really straightforward and simple ways of understanding things. It's just important to note they don't necessarily delineate. The bottom of the wave doesn't necessarily delineate the low. Neither does the top delineate the high. It's just the overall structure of, it's like a trellis and a vine. Like the wave is kind of the trellis, like it's the structure. And then the vine kind of does what it wants, but it comes back to that structure every now and then. And that's really important. It's generally following that pattern. So right now, I kind of think that we're basically in the middle of the wave. I think it's essentially right now, but that doesn't mean that it couldn't come back down again. It's like that's not possible or something, you know? And it's weird too, looking at this now, I'm like staring at this like, what if that's the same? What if it is? That'd be kind of crazy. But you know, like this kind of stuff happens where you have this, do you see like the setup? It's not really identical, but you see how this setup has like this bizarre kind of double bottom here and it comes back down to try to meet the lows. It's not very similar to what we're talking about here in some ways, like potentially coming back up, hitting that supply and then retracing all the way back to the previous bottoms. I mean, in our case, you might look at that and say, well, that means it's only going to go to 460. Yeah, but every one of these is different. So it's like, at the same time, it's like, well, crap, then how do I know? It's because it's coming back to check the creek, you know? So like when we look at, hey, what's up, big ads? When we look at this big picture, I think probably the easiest thing to do is just to look at this as like a big creek jump and look at it in two phases. Like there's the higher creek, which is purple, and the lower creek, which is blue. If this jumps over, where does it do it, right? Probably at like 6. If we find support and run up, let's say we went all the way to 13, whatever. All right, cool. But then where do you have to come back to get to that creek? Well, from 13, you have to come all the way back down. And frankly, the low, like the fastest, if you just went at a bullet speed, would be like maybe 480, kind of where we're at right now. Like perfectly right up, right back down. The slower end, if it sort of chops for a while, on the big picture, I mean, it could be a while, you know. It's a strange kind of phenomenon to think about because you're thinking about a lot of things all the time in the market. It's like, well, I don't really want to think about that, but symmetry-wise, again, going kind of off the middle, it wouldn't come back down to the bottom until March, and that's quite a ways off. But you can see how, like, all right, let's say symmetry-wise, the up and down motion here, up and down. Again, trajectory in, trajectory out. Let's use that 61-degree trajectory. You're like, this is getting complicated, Booksy. It's always this case. It should be the same number. It is. If I did it right, it's roughly the same. This doesn't come down until like March, right? And you may not believe this, but it actually looks like 219. Which can kind of make sense to me. So there's a wave within the wave, right? Down, up, down. And it, technically, if it doesn't check this creek on the way out, this is like the steepest one we have. You're like, please, no, Booksy. No, don't say it. I don't care. Say what I want to say. If it doesn't, you guys are like, oh my gosh, such ridiculous, dude. Think you're so cool, man. I'm just joking, guys. Yeah, I mean, if it doesn't come down until like March, then it would be pretty close to like 250s down to like 220s, this area. That's like roughly symmetrical. It's not what you want to hear, is it? But that's like the natural waveform here. It's like up and then back down to the creek. And if it goes up at the same trajectory that it comes down, we might be a little bit off here. You know, we're kind of estimating with this trajectory business, but we're also looking at where those creeks intersect. It seems pretty obvious that that's where you would go. That you'd end up right back down where you started. naturally. But what's weird is like if the creek had been higher, I may not have said that, you know. So there's going to be some like proving that happens, but to me that actually makes a lot of sense. So I'm like sitting here staring at it like, well, kind of makes sense. That's the creek jump. M cross 1, come back down, break out. M cross 2 would be way later. Wah, 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 wah. So don't want to like put that as like the only thing that could happen, because technically if it goes up and it comes back down like immediately, it could check that creek as high as like 480, you know. I mean, it'd have to like rocket all the way up to like 13 or 14 and then come all the way back down to like 5 again basically. And then I think from there it could just take off. And that makes sense. It's basically regaining this support, this lower support right here. So there's always a possibility there that this is the support, right? And that would make sense to come up, come back down and check it here instead, right? Sure. You guys are like, sure, Booksy, whatever you say. My point is, once that's done, if that is removed, then you have a really nasty potential for really low. And it would make sense from a waveform perspective to do that. So I'm still operating on like cautious optimism here that doesn't happen like that, but I think it's just very likely. And if that's the case, then you have to look at something similar to GME. And I already did that, so I know I'm kind of going in circles a little bit, but that for me would be coming back down to, in much the same way, kind of chopping back down after this push up. I think this goes up to like maybe 45 and then starts chopping back low. It could come all the way back down to by next year to like 12, 13. So there's a very real possibility that this all catches higher and it goes up again. I think in that case, maybe GME only comes back to like 25s and then it races back up. I have this as a possibility for end of the year to like the 80s. And I think for AMC, that would be us coming back to like 5 and then not 25, but 5, basically where we're sitting at now. Do the full retracement and then push out. And that's potentially where you could see it rally into November. I have a lot of suspicion about a secondary rally for AMC. But I suppose if it did rally into November, if that were to happen, it'd have to be based on elections or something. That's maybe when you could see that secondary move up that could break the creek to 20. The only place I can put it is like later in the year. That's pretty much the only place I can see that as likely. So, yeah, it makes sense to me. You're like, what if it only goes to 8 or 9 and then it comes down and then it goes back up to 20? Then that's what happens, you know? It could be that they're trying to squash people who have leaps 2025. And so they pump it up early. They exit all their call positions that they may have. Most of them are not having calls anyways. And then they dump it back down into the end of the year, keep it low. And then after February or after January, then they pump it again. That would actually make sense too. You're like, why would it make sense to? Because they're trying to screw people over. That's why it makes sense. You know, it would make perfect sense to have like a late January run to 20. Everybody already got their calls all squashed to pieces, waiting for it to go. Uncle Mitty said, is it possible to hit all-time highs? Is it unrealistic? Yeah. You guys are like, what? Well, it just is. I'm not trying to be like, I'm really not trying to be negative. It sounds like I'm trying to be negative. It's a matter of, again, like the bigger chart. Okay, GME has a far greater chance that it might hit all-time highs again than AMC. there's a couple things that have to happen. Basically, in order for AMC to get to all-time highs again, when it gets back up to this weekly, and I've already talked about this quite a bit, I think it's going to be February 2026 before we hit like $80 again. I think this is where the waveform leads us. I don't think it's an accident that it looks the way it looks. I think that it's all kind of built into it. It's going to get us right back to that like middle ground target area, roughly around 2026. That's been my thesis for a while. You can see on the chart, there's a 200 SMA on the weekly. And last time we hit that was in January. And this is the crazy thing, right? Is a lot of people are looking at certain comparisons saying it's this or this or this. Look at where that weekly is. We haven't even reached that. You're way below it. It's a good case for the slingshot back up there, but it's not exactly like comforting, right? That we haven't quite hit that yet. So if by February 2026 we're up to the top here, maybe it's sooner. We may get there as soon as next year even. You guys are like, what? Well, there's a lot of things we could talk about with this setup. One of them is the fact that this actually does double bottom on this trend right here. So in theory, like, could that be very similar here? If it's mirrored out, sure. Right, sure. So I'm saying it probably hits a high in February 2026. There's a number of ways this could happen. But yeah, it could be as early as like summer, late spring, summer. It's not impossible. Just look at the picture and you'll see what I'm saying, right? Overall. But that being said, does it go higher than that? Why not, Booksy? Isn't this the same place that this took place last time and took off right here? It just takes off to the moon and does it again, shoots way up. I mean, maybe, there's a lot of thought that you could put into it and say like perhaps, this is where it's going to go and it's going to get really close or maybe even push up over all-time highs. It's a big widening. So that's really like a halfway point of the widening. I think that's accurate. It's right around 70. It is. It's pretty accurate. I think this is important. But unfortunately, like, we're talking about at this point, like at least a year and a half away. And I don't think it's possible for me as a human being to estimate what happens a year and a half from now. I also think that when you look at the market value of AMC, it would be like, why would it warrant that? And what's to prevent it from basically being like a copy paste of what happened here, but not making it as high? Because like, remember we ran up to 72, that was the price of the chart at the time. Now it's 393,400. And if we ran up to 72 again, oddly, it's very similar. Hint, hint, nudge, nudge. I mean, it's kind of similar to making all-time highs, although the value has now been shot to death. Kind of finishes that wave. It finishes the top of this trend. It really would be a major, major change to have this break out again. Yeah. I mean, it would be a huge, significant change if it broke out here at like 82 again. So all I can say with certainty is that I think it's going to get back to this price. But then from that point forward, it's really it's out of my hands, and I think that people that are saying it goes to all-time highs again, there's not that many of them, but people that say that, like I could make a technical case for it, but it's tough because there would be something that would happen. Like we wouldn't get up here and have no dilution. We wouldn't get up here and have no stock split. If we ran up higher than this value, it's like those things would sort of mess with the chart on the whole, mess with on balance volume. Do I think we ever get back to this price again, which is now like 400? If it happened, it would be like way later. Like if this pushed up to 84, this is my thought, okay? I genuinely think, sure, it's possible, but I think we'd have to come back down to like 11 first. And then I know that sounds ridiculous, but I genuinely think that's what's going to happen. That would be what would happen, essentially. We'd basically do the same thing all over again, and we do it smaller. So we'd have another like kind of topping action similar to the 2021. You'd have another wave here that basically breaks you out finally, and then you do it again. You know what I mean? It would be like way over here somewhere. I mean, it'd have to be. It's really hard for me to imagine why this would come up to this price and not just sell the crap off. you know? So I have a lot of strong feelings about it. I think some of it's intuition, some of it's just feelings. It's not really like data. But I also have a lot of data, and I don't feel like the data really supports much else at this point. Yeah, I don't feel like the data really supports. Like it would have to be much later. I mean, it just would. There'd have to be a pretty important change that happens right here, and it doesn't break low again. And that's why I think it would make a lot more sense if this came up to like $80 and then came back down to 13, and then maybe from 13 it goes back up. You know, something like that. Again, wave up, down. It's like pretty straightforward, you know? And even then, it's like, man, I don't know. So I think it's a little too far fetched right now. I would never complain, guys, if it rocketed up to $700. But do I think that there's a strong technical case for it at this point? No. Like, there's a decent technical case for getting up to like 80 again. That might sound like all-time highs. So oddly, from like a reset value, it kind of sounds like all-time highs. But GME is a little different because even though both of them have a possibility of like longer term distribution, GME doesn't seem like it's got it just doesn't have the same markings, it doesn't have the same kind of weakness as AMC. So the major swing that happened is very different. It's positioned itself much higher. It makes it very easy to conceive just going up to all-time highs. Again, maybe not immediately, but like if you look at the comparison of the two, the fact that GME is up at like the 20s right now and AMC's bottom feeding, some might look at that and say, well, AMC's had the bigger swings. It has in some ways because if you look at proportionally, yes, it has because GME didn't retrace back to new lows, and that would have been proportionally like similar to AMC. But take it for what it is, which is a sign of greater strength, in my opinion. Exactly. I think a lot of people I'm reading your stuff, Dreamwalker. So, yes and no. Like, you're kind of right, kind of wrong. Because even though you couldn't predict necessarily like a real squeeze, not one that's like kind of manufactured, there's obviously evidence that institutions can manufacture a short squeeze, in which case they already have a target in mind. Even though that's true, GME and AMC both hit technical targets on their breaks, and they definitely pulled the plug at a particular time. And we just made a case for this on GME. I don't really want to go back through this again, but it's absolutely like the middle of the cat here. It was already a waveform that existed since the beginning of the stock. It was a 10-year wave right here. And when GME squeeze, that's where it goes. And then looking at the bottom, it just frankly looks like a spring with a retest on the floor. I mean, there's things about it that are technically unpredictable, but there's other things that are not. You think it's a squeeze, it's really not. I think GME was a squeeze, and AMC was to some degree as well. But like this recent move up wasn't really a squeeze. I mean, it was a technical trade on my part. I traded it from here to the top. Those are things that you don't do on accident. So it's the idea of like you can't be technical during a squeeze isn't really true. I have at many times though said, and I agree with you, that it's very hard to predict because once it starts going, it's not that the charts are, that's where I'm kind of disagreeing. I don't think the chart is irrelevant. I think the chart's going to find like a natural resting place, but I don't think that AMC and GME have really squeezed but one time, like maybe, and that was with the buy button removal. That was it. Everything else has been very, very, very controlled. So like every big run up we've had has had very obvious technical readouts on it. That's a little different than like some of these other ones that I see. What was that one chart that went like 2,400% or something like really fast? And I remember that one, it had just opened. There was no technicals to even be found. So you're kind of looking at it like, where is it going to stop? It was like $200 a share or something, and people were asking me about it. And it had gone from like opening price of like $10 or something, and or whatever it was really low. And it just kept going. And you're like, well, when's it going to stop? I don't know. Like it was probably the fastest short squeeze ever. The market, it had opened and then dropped a bit, and then it just rocketed. It wasn't even, I think, a year-long chart. It's like, I don't know what to make of stuff like that. I don't think you can have technical strength in that. Once it finds its top, then all of a sudden it's like it's a technical play again. But I don't think on the whole there's been that many short squeezes in the history of the market that the market wasn't already prepared for. So I'd have to disagree that technicals are always irrelevant. I think squeezes happen every day in the market, but they're not always like way out of control. And that's what really you're talking about. So yeah, speaking of short squeezes, so there's two charts that I've been talking about quite a bit, and they're very frustrating charts because charge point on the one hand looked like it was about to advance, and it failed to advance back over 2, and it just crashed really bad. And now it's basically either double bottoming, or again, maybe it's going to go into this is like a phase B top, auto reaction, phase B, could it go into a spring? It's in a good place though for a short squeeze. So there's like over 26% short interest estimated on Fintel. That's pretty high. And I think it's got 13 days to cover, which is also really high. MPW, this is almost unbelievable to me. MPW has nearly, I don't know how to even reconcile this in my brain, but apparently has like 50% short interest. And I'm like, what? How's that even possible? Essentially 50% of all the regular shares available, like for the market, are shorted right now, which is insane. It's dividend payout day. I usually would expect there to be kind of a sell-off after that. I don't know what's going to happen. when the market rate cuts. I don't know if this is going to work out or if it's going to tank down to threes. In some ways, I don't really care at this point because when I found out that like 50% of available of like regularly available shares, we're talking about like, hey, your market cap's 500 million, 250 million of those are short. That's insane. What's even crazier is got a 17 days to cover. 17 days to cover is how long it would take all the shorts to cover if they started trying to get out. That's insane. I mean, you get a solid 17-day run up if this thing starts bleeding up. I'm not saying that's a reason to invest in a stock. Obviously, if half the regular shares available, not talking about like rehypothecation or whatever you guys want to call it, or naked shorts, none of that stuff. I'm just saying like the regular float. That is a bearish, it's a very 50-50 bearish bullish sentiment. So like it's a dangerous play. I talked about this one a lot because I think it's my highest risk play, but it's also for some reason the one I have the most conviction about. I don't even know why at this point. Like I've not seen anything like even horribly negative about it. But for some reason, I guess it's just struggling, man, because of some bad tenants. But they, at the same time, it's like, I don't know why the analyst estimations and all this junk are so wonky on it. Like they've already exceeded the amount of money that they were supposedly going to raise this year, like, or earn this year. So I'm like, why is this bad? I don't get it. Why are they missing on earnings? There must be some reason that these estimations are so oddly high. Like, how can you have that happen? I don't know. It's a contradictory stock. Let's just put it that way. It's a real estate investment trust. Like it's at a place right now where if it did distribute, it's probably going to come down to near like threes. So I don't want it to sound like, oh, I got to buy it now, as Booksy thinks it's going to take off. I think there's a possibility it could come back down. Okay. And I'm saying that because it's at a place right now where if it fails, there's a strong chance of rejection pretty low. And this is where you would expect there to be maybe what we call like that spring action potentially. But I'll be darned if this isn't like one of the best squeeze candidates that I've ever seen in the market. That's like insane. And for this to have that kind of short interest, that amount of time for days to cover is crazy. The fair value of this is not $5. It's like $14. So I'm like, this is a powder keg. You know what I mean? I don't even know how to like verbalize that. I feel like it's going to dump and then the shorts are just going to cover and it's just going to rocket or something ridiculous. You know, it just takes like one big buyer. I got a bad feeling about what's going on right now. Like I don't want to say like super bad, but I have a weird feeling about what's going on right now. I don't want it to break back below 470s again. It needs to kind of hold that entry support level. It's been wrapping around it, and it's 467. So it dipped down there this morning. It looked like it hit 470 and popped way back up. It's still not broken out yet. It's got to get above 520s. What? 520s? Yeah, I know. You guys are like, what's wrong with this? Why is it the same target? Why is it the same numbers as AMC? I don't know. I cannot tell you exactly why that is. I know that Vanguard and BlackRock have interest in this as well. I think it has something to do with the low, because the low is like 290, and it's really similar to what we see on AMC. I can't really tell you why exactly. Like, there's a lot of similarities between the chart. They're not like perfectly similar, but like this has a basing at 290s. I don't know why the numbers, it just boggles my mind at this point, because I'm like, why? I don't get it. Why are they so similar? They're completely different sectors. It seems like I pulled this out of my bottom, for you guys, because you're like, where did this even come from? When did you want to get into real estate investment trust? I've been thinking about it for like a year. So I was like researching them, and this is one that piqued my interest because of how undervalued it is. Like it's super low, and how weirdly like bearish it's been, even though it doesn't seem to have that many issues, and it's had historically pretty good leadership, pretty good track record. And it's at like an all-time like historic low area, and I'm like, dude, what the heck? And now I'm looking at it like, why would there be a 50% short on this float when it's basically like at a historic low? Like, are they thinking that this is going to go out of business? Are shorts just like really overzealous about this? I can't even understand that. And I'm sitting here staring at this like, this kind of reminds me of that GME chart we just looked at, doesn't it? I'm not saying it's the same, don't get me wrong, but doesn't it kind of like vibe with that GME chart? We just looked at this. I know it's not identical, but dang, like, what is going on with this? Really wigs me out because I'm like, is it that obvious? Like, could it be that obvious that this thing's about to like take off? Am I going crazy? It's super weird to me that 520s is the same level too as AMC. I don't know why. You guys are, well, you don't think AMC's going up. Why would you think it's not the same chart, right? I'm just saying like it freaks me out how similar they are. I can't understand why that is, but it just really wigs me out. I just think it's so weird. And this is like a giant widening too, like right here. This is a widening, so it almost like demand that you come back up to 21 if it breaks out. It hasn't done it yet. It's really close. I will not make $1 million on this. My call options are all for January, so I'm gonna get like one chance, probably, maybe two, if there's like a Santa rally kind of thing. But that's it. Like if it ended up continuing on past that point, like there wouldn't be anything I could do about it probably. Like I'm not going to be able to, maybe I'll keep some more money in it or something, but if it did that, I'd be like, "What?" Right now, the only evidences that I have are like October, it should be around 850 or so. That's kind of been my big thing. But like long term, it's a freaking weird chart to me. And now like finding out that it's 17 days to cover, I'm like, are you kidding me? That's very similar to the kinds of run-ups that we've seen on AMC that take like 2 weeks, 17, 18 days, 20 days. You know what I mean? Like it's super similar. Do I think it's a good dividend stock? Well, it was one of the highest dividend stocks at a 15% dividend yield, which is crazy, but they've cut it twice. That's another big part of the reason why people have been so bearish. They're basically cutting it so that they can keep more cash on hand while they're renegotiating with a tenant. This stock owns like hundreds and hundreds of like hospitals across the world. Mostly, I mean, medical properties is exactly what it is. Look it up. You can see their portfolio if you want to see what they have. It's a worldwide trust. So people invest in it, and then they take that money and they invest in real estate, and then, yeah, the dividend's been really, really high, so people have really enjoyed it. But it comes from an era when this was up here around 20, 30 bucks. So for them to cut the dividend when it drops low like this for an extended period of time isn't unheard of. I think it's a good one for the dividend. I genuinely think this is going to end up back in like the $20 range by 2028. So long term, I think it's a really positive play. The only thing I can see this being negative is if it just doesn't recover. But like, look at it. You know? Look at the volume going into that bottom. I mean, it's just insane. I don't know, man. I'm trying not to like hype it up too much because I know that some folks got in this and they were like really disappointed because it didn't work out, that it came up, as high as we wanted it to go. Um, oh man, look at that weekly too. That weekly is like right where AMC's weekly was in January. Oh man, this is crazy. I don't even know. It makes me really nervous. Like, it almost makes me like sick to my stomach. Like, cause I'm like, it can't be that easy, you know? I'm not saying I can predict squeezes, but like, just judging based on like the overall picture of it, it may need to have another dip, like I can't tell. That's the only thing that's like really bugging me right now. But like I can't quite put my finger on it. If it needs to have like that next drop low, I don't know. It needs to have like a real solid double bottom or something. But it looks super solid. That is the 180 moving average right there. It's at $10. 180 on AMC was up here. It was like right at that middle zone when January happened. I can't remember what price that was. It's probably like 9, maybe 9 or 10, maybe 12. I can't remember. It was 12 to 14. All right, I wasn't that far off. I feel like it was right there. I remember when it came down here, this was like 14s. But I couldn't remember if this was like 9s or I think 9s was like later. P-Ton has the same numbers as MBW and AMC2. Lows of 290, and then the SOS is 520s. Yeah, I think it must have something to do with a. Let's see who our operator is. Let's check it out on Fintel here. So let's take a look. P-Ton. Short interest, institutional ownership. 538 are long only. That's a lot. 25 are both, and 13 are short only. So there's 385 million institutional shares. BlackRock. BlackRock. There it is. There you go. No, the BlackRock's in it. Vanguard's in it. Morgan Stanley's got 38 million. They actually let go of 1 million. Capital World Investments increasing theirs. They've increased by 2 million. This isn't really recently though. This is like February. Vanguard increased by 3 million. It looks like for whatever reason BlackRock let go of like a little bit. Probably was like because this is a 13G, so it's probably like a random part of their, somebody had like a few 100,000 shares in a fund and they sold them. Let's check filing dates. Let's see what's going on more recently. Big orders is what I'm looking at. So this is 829. Bright House, that's Morgan Stanley Discovery portfolio. So Discovery sounds like maybe investing in lesser knowns or low. I don't know. Could be anything. Not distressed, but we could probably look it up. Small Cap World Fund Incorporated. That's got 7 million in this. That's quite a bit. IWR Russell Mid Cap ETF. That's just ETF trades. ETF. Vanguard Balanced Index Fund Investor Shares. That's 827. That's also really recently. That's 226,000. Vanguard Small Cap Growth Index Fund Investor Shares. They put 4 million in it, and that was on 827. So Vanguard, definitely a big buyer here. Vanguard Extended. It's Vanguard, probably. Vanguard again. Yeah. Morgan Stanley and Vanguard. BlackRock's in it, but I'm not seeing any real active BlackRock stuff. So these people shorted it 500,000, 826. So it's got some heavy shorts in it recently. Looks like Morgan Stanley and Vanguard and BlackRock. So I would guess that Morgan Stanley and Vanguard are your... I mean, frankly, if Vanguard's in it, they're also the ones that are really heavily in AMC. So if you're looking at a basket, I would say Vanguard is definitely a high contender as an operator, and BlackRock is as well. BlackRock is just ridiculously powerful, but they seem to be taking kind of a chill back seat for whatever reason on both AMC and I've heard that Stockfather told me that Vanguard and BlackRock were basically the same company, and I don't know why he said that. It's not something like he would normally say, but he was saying something about it, so maybe there's some major connection between the two. I'm like, he's like, yeah, they're basically the same. And I'm like, okay, I don't know what that means. Maybe it's because of ownership of different things, like they both own different things. They probably do work together if that's the case. I mean, you're not supposed to, but they're one and the same, basically. That's what people have said, but I don't know. I don't really know anything about it. I'd have to look up their relationship. So yeah, I think these two together might be kind of disguising their leadership here by not outweighing Morgan Stanley, which seems to have the most vested interest in it. So I'm willing to bet that MPW also is a Vanguard BlackRock stock. Yeah, 800 institutional owners. Geez, there's a lot of institutional ownership in MPW. 773 are long only. Only 11 are short. Well, then why does it have such high amounts of short interest? Is it just retail? I don't get it. Holy cow. Remember we looked up State Street and they were like a multi-trillion-dollar corporation? What one shot of olive oil does. This is a really funny picture, by the way. Look at this. Vanguard has 85 million shares. They're probably because of the dividend. This is very attractive. BlackRock has 73 million. Holy cow. Oh my gosh. That's the highest I've ever seen on any of these ones we've checked. That's a lot. That's 100 million shares for Vanguard. They have 100 million shares of MPW. Oh my goodness. It's crazy. Crazy, 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 crazy. Now, see, this is weird because when you look at that, Vanguard Group Incorporated, 92 million. And then Vanguard Group Incorporated here, this is 213. This is 813. This is more recent. So they've increased their holdings. This is an older one. This has 88 down to 85. It looks like they had less, but then they actually increased it by 7 million shares. BlackRock, this is odd because they decreased their number 2, and then so did State Street. BlackRock says 71 million, but a 13G is going to have as we've learned, is going to have different funds in it, like lots of different ones. So what's weird is there's not like probably not a single fund here for BlackRock. I'm not seeing it. Let's see if we can look up alphabetically the investor. Let's see if we can find BlackRock. B-L-A-C-K, Black. R-O-C-K, Rock. Here we go. BlackRock. You guys are like, why are you so excited about BlackRock? I'm not. Real estate investor fund, mid-cap fund. Why is this so small, though? Large cap series fund. Large cap. It's not a large cap fund, though, is it? I don't get it. I'm not seeing any. It's weird. How do they have that many then? Maybe they don't. Maybe I'm missing something. Maybe they sold off. Yeah, this is weird. What the? BlackRock Tactical Opportunities. Maybe these ETF funds are all being added together. I don't know. I'd have to look up and see how BlackRock operates. I don't know why this would be. I don't know. I'm confused why BlackRock's not showing up, but they're here. There's nothing else any earlier than January, so I don't know what's going on. It doesn't really matter. It looks like Vanguard is the operator on all three, so there's that. So they all have the same operator. So Piton, MPW, AMC, weirdly all have the same operator, same kind of breakout levels. I don't know why they would do that. It's not like they need to make it easier for themselves. Like they already know what they want to do with it, so why you don't have to make it any easier for yourself, if you're the operator. Well, I'd rather these be the same numbers. Weird, huh? Anyways, so yeah, I don't know what I would do with that information necessarily about MPW and really anything. Is oddly similar to GME though, isn't it? I don't think I've ever done a wave analysis on this beyond. Yeah, I don't know what I would do here as a wave. This is 2008, which didn't really affect GME. I mean, it did, but it didn't affect it the way it affected everybody else, per se. This would definitely heavily affect a stock like MPW. I'd have to look at... yeah, I don't know. This is a tough one to do a wave analysis on. Why am I doing a wave analysis? Because I think that identifying a wave here would help identify the trend that was lost. I think we already know what it is because I had this marker here already. So I think that's it. And I think yeah, I think that's it. I think it's already in the book, so to speak. Oops. Like I already had it. I just didn't know like exactly what it was. This one right here. You see that wave break? Check, check. So yeah, in theory, if it did a squeeze that was really similar to AMC, this thing could be up at $46. it probably would take as much time, you know. I don't know how long it would take. AMC and GME is obviously a pretty special case, but I don't think that squeeze would look the same here. But it definitely could get up to like $80. I had it pretty low key moving. But if it just rocketed and went through that motion of like 50-50, then I do think it's possible. Let's take a look. $12. Trying to remember what happened on AMC there. Just curious, just a curiosity. I think that was the 50% mark. It was really close to the 180. It was really that intersection of all three, but 180 right there. There wouldn't have been a way to know exactly. The better way would have been using this guy, that LSPY area on the way down, and then the intersection on the way up. Where is that on this stock? I have no idea. Let me flip back and forth real quick. So this is after it broke down. There's this shallow S curve kind of motion here. It bounces and heads low. It's right underneath that floor. But MCW didn't have that kind of floor because it was running on an uptrend. I suppose the middle would be 12. And if it's not 12, it's like 950. It's this floor right here. So it's either 950 or 12. So if it ends up being 12, then this doesn't get there till April 2026. It's not that far away, but it could technically get there. And if it ends up being 9, let's see here, 989. Maybe. Just doesn't ever get there. Probably a lower target, this lower one right here. You get there by August 2025, which is like a year from now. It seems like a long time, but in the grand scheme of things, a lot of that time would probably be spent here in like a backup period. If it did do something like that, it's hard to imagine it being identical to anything else, but maybe. It's a maybe. I guess I don't really care that much. If it does it, cool. I'd have to find other evidences that would happen. Like, I don't know. Are there other evidences that it could get up to there in August? Recapture that? Seems like kind of far-fetched. Maybe not. 49. Yeah. So it seemed like you would at least go back at a similar trajectory to get back to this value. It wouldn't be there till, this is a lot more accurate, this one. It's really close to what I would expect. But not way sooner. I guess it just depends on your motion, your feelings of like a squeeze motion. Maybe it does squeeze like way over here to 60 something. It just takes a lot longer. It's a peculiar chart. I could definitely see it returning back to like 70s at some point. There seems to be a lot of potential here. And I would say that very seriously, you know, there's a lot of potential there. Like long term, this is very different than short term, right? We talk about long term stuff, it's definitely more speculative, but at the same time, it's like what would need to happen to get there. And I think this has a demand if it breaks this widening wedge to come all the way back up to 24. But technically, like, it usually does so, and about the exit trajectory is about the same as the intro trajectory. So that wouldn't be till about 2027. I've had other evidences that maybe it gets to like 25 by end of the year or early part of the year 2028. End of the year 2027, early part 2028. So it's kind of a mixed bag. But this is the down wave. This is like the down wave, up wave kind of thing. And this will be the up wave. So it's the suggestion here is not really like much of a suggestion. It's very much I could very, very easily be back up at 25 in 2028, in my opinion. So everything else would just be kind of bonus if it happened to move any faster than that. I don't feel like there'd be a super strong amount of evidence. So I feel like maybe that's what I'm trying to say is it's more likely that this is still going to be like a fifth wave kind of deal, and that you end up maybe back down here like more of a corrective measure, and then later it kind of comes back up. So this ends up being like a huge sideways action for a while, reestablishing like a floor in this area. It would make sense, and then because that would need to be checked before any kind of major continuation. And you head up, finish the price target, and then maybe after that, if it can find an SOS, that's at the very top. Yeah, maybe after that it could be in a kind of a bigger spring opportunity mode. Again, just kind of being realistic about that motion seems more likely. We'll see. Anyways, I still think it's a really strong spring candidate right now. So I've been in it for a bit. It's a mixed bag. It depends on the time frames and stuff. And like I said, it wouldn't be overly shocking if for some reason this came all the way down to threes. So it's not that I want that to happen. It's just, sure, I could see that happening at this point. It's a similar question as what we see with some of the other charts. Like there could be like not a major drop, but like a pretty decent chance it would have to hold kind of now, right? And the IWM is a good example of that. It's at a place where it's hitting right where we thought it would hit. Heck of a call out, but it didn't matter. I didn't trade it. So if you're like, hey, that was a great call out, Booksy, I'm happy that I got it right. My theory was that it was going back to fill that gap. I don't even know if it filled. It may not have. But it was also because of this pink line, which is a 50-50 wrap. And I think that what we want to see is it push back out, find support around 209, which is kind of where it's at now, and then it can push all the way back up to 220s. It needs to have, and I don't know exactly what this is going to look like, but it needs to have that breakout above 221. That's going to be a good sign that this thing could run all the way up to 250. I don't think until that happens, there's much else to say. I think it's consolidating up towards 215. So, easy money trade, maybe. If you think that they're going to announce a rate cut, this might be the last time it hits this low. A rate cut could send it flying. This isn't SPY, this is small caps. They should be affected well, in a positive manner. And I think there's a larger S-curve here that's probably pretty accurate. I mean, I don't think it's way off. I've done this a couple times, and I think it gets up to that particular target at October 2nd. We're really looking like this is going to be an early October kind of move. So, yeah, I wouldn't worry too much about the differences between the three charts. Just looking at your comment, just each chart by itself, see what's going on by itself, because there has been some similarity in the price action here in terms of like the delay. Like this took a long time right here to go sideways, and it's at a very similar spot in some ways as AMC. If you look at the big picture, you kind of see there's some similarities. May lows here in July, and then it pumped up early July. This took a lot longer. AMC was kind of higher up, but then largely it's been similar, like chopped down since July, and then maybe a breakout here. It's getting really close. It's right where it needs to be for a breakout. It just got to happen. Unfortunately, just like AMC, it's kind of in a place where if it were going to distribute, this would be the place that you'd probably have like an upthrust and then try to slide back through. I think that downward action that just happened right here may be the most positive thing I've seen lately, because it's hard to see it. I haven't really watched MPW very closely because I'm just kind of waiting for it to finish. I knew it was going to come back and gap fill at 450. It went lower, reversed, and then there's another little gap here. And this gap fill kind of is nice because it came back and tested that 467 area, and that's a really big deal to me. It needs to sort of be the final check. When we entered this zone down bottom, that's what we entered in at 467. That was the first major check. So testing it on the way out here, it looks like a really nice symmetry, doesn't it? And it does look like a cat ear that didn't break down but then crossed up. So far it looks really good. Looks really good. I haven't even checked my MPW calls. They're probably still destroyed because they weren't moving at all. They were really dead. It might seem really exciting to you guys if I make a lot of money, but like, ooh, you made money. Good job, Booksy. But I mean, pretty much all of it's dog-eared for something at this point. Like, we already know what we're gonna use it for. Mostly for like debt junk. Debt. I paid off all of my debt about a year ago. We paid off all of our debt, but one thing, well, two things if you count student loans. The student loans aren't as huge of a deal to me because they keep getting forbearance, like they keep pausing them, so I haven't really been paying on them. And there's not that much left. It's just a slog. If I keep paying it for another 3 or 4 years, I'll be eligible to have them removed anyways. Potentially. I guess that could change. But there's like one credit card that we have that had like racked up some debt that we never fully paid off. So that would be nice. Anyways, there's a lot of stuff. But my point is that entry right here, the exit right here is looking really good. So now it just needs to come up above 5, which is what happened here, and it could just take off. It's hard to imagine it just kind of reversing that move and going all the way up to 989, but it is possible. Yeah, it would be crazy. I guess it's possible. That could be where the move happens. I would have expected it to not be on the same level, but like be offset down to here. So I still think that target that I had for October, which is the 8s, that's probably going to be the best thing that I get. So, anywho, that's all I've got for that. Pretty much coming to a close today, I think. I hate to leave you guys on a good day. It's been pretty nice, but it's not. There's nothing really pressing here that we need to talk about anymore. Kind of went through the whole thing. Not really liking how overbought AMC looks. On like the 2 hour, it looks like it's way overbought already. I don't get it. That daily looks hot too. Yeah, we might benefit from another pullback. It's not one or the other, but this looks kind of ugly on 4 hour. It's already up to like 57. What? The distance we're traveling is fast. I think we're going to need to like chill out. Whether we get into an SOS or we get just above 5 here or we chill out right now. We need to like relax that RSI, bring it back down to sub 50 before we really take off. Usually you see it around the 50 when it's really taken off. I know it seems counterintuitive because it's like, well, why wouldn't you think it's on the bottom? I don't know. But it just seems like a lot of times there's a chop around like 50. Like right here it was at 41 before it took off. I think it's because they're trying to make it uncertain. So like just like they bring the price back to the middle of a range, a lot of times those higher indicators like 4-hour and daily, they are like back in the center before they move. I think they're trying to the institutions are disguising moves by like keeping it really flat. It makes it harder to predict when it's just sitting in the middle. And this seems really common. Like I saw the same thing on IWM right here. You see how it was chopping right along the 50 right before it took off. So it may seem a little counterintuitive to say that, but I genuinely think that's what's going to happen here too. Like I think it's going to be right at 50 or maybe slightly lower when we get to FOMC. I think AMC, you may see the exact same thing on the 4-hour and the daily. You may see it chop here, and then as a result, the price action, it kind of chops at the 50. Because for me, I'm like, well, why wouldn't you be why wouldn't you be as low as you possibly could? I don't get it. Like just in theory, I know that they don't do it because of RSI. RSI is just reflecting what's going on. I get it. But like, wouldn't it make more sense to be like, that's the low? I mean, yeah, technically, yes. Like this is back near the low on AMC. The RSI was super low, right? Back in April. But like, it didn't take off from there, right? It just kind of went out, ranged up, and then took off. So it's really bizarre to me to see like that. It's not really bottoming, right before it takes off. Usually there's like a secondary action that is more of chop, sideways kind of action. So I don't know. Maybe that's going to be a big part of this. We'll see. Yeah, GME is at the same spot too. It's sitting on or near the 50 right now. You can see the M cross 1 and then 2. There's a jump over this creek. And then there's kind of a lack of, I'm on the daily on GME. There's a lack of, well, there's one pullback. Never mind. There's a pullback on the 5th. That's pretty recent. Maybe one more right before the move. It's either going right now or it's going to have that last pullback right here into FOMC. We're kind of in the same story all over again, right? Like, which is it, Booksy? I'm inclined to say that we're going to coast back down, but yeah, it just seems more reasonable to me. Like you would coast back down one more time and then Monday just take off. So yeah, one more relaxed week here. I know it sucks to say that, but we'll see what happens. But this is so far so good. It looks fine to me. I'm pretty happy with that. I'm just kind of gauging the overall move, RSI, where it hasn't checked yet, et cetera, et cetera. I feel like we're missing just a little bit. GME particularly kind of keeps pushing, but this is the area it needed to come into in order to, I said this is kind of the breakout zone right here. You need to come into here and then take off. This is old notes. Just delete these. People get confused by stuff. I confuse myself too. I'm like, what is this from? So it's kind of just taken off, isn't it? Maybe that consolidation happens here in the form of like an SOS. And then earnings is Tuesday, nighttime, after market close. I hope this isn't like a pump and dump in earnings. I'm excited. We've been waiting a long time for this. We really have. Too long. All right. I got to be honest, probably not going to be back today because my family will be coming home pretty soon. They were on a trip. And I don't think I'm going to be coming back on the stream when they get back. So it's all good. They were just visiting family this weekend. And I was just hanging out with the cats. I don't think there would be a major reason to come back either. I think what we've kind of set up is probably pretty likely for us. So this is about what was expected here. Topped off, came up pretty close, I think 511. Did I get it right? Nobody's going to tell me if I got it right. I can't tell. It looks like I got it right. It looks like 511. And then it started chopping back down. Good for you, Booksy. 1, 2. This is M1, 2. Come back to find support. Man, I forgot again. Man, this is good. So you think AMC pulls back? I mean, it needs to cool off. Yeah. I think it seems very likely it comes back down to 484. 496 is a possibility, but I think it's probably going to come back to like 480s before it takes off. It could be a combination of the things that you see on my screen, but the overall picture is one of bigger wave leading a smaller wave. So right now we've got the small wave push up, but it's lacking that 1, 2, 3, 4 motion. It's just kind of missing that pullback. So this morning I said I thought it was going to come up to 511 and then pull back. It's pretty easy to read the wave here and see what needs to happen. It's missing a couple little checks on creeks, nothing crazy, but there's definitely one here again. Maybe 496, and then maybe coming back to like 485. I don't know. I've said that for the entirety of this summer that I thought it was going to eventually hit 45 before it takes off. And I didn't mean that in like a random kind of way. I meant it in like it's going to leave from like 485. Like that's the center. That's where it's going to take off from in the end. So you'll be stuck not knowing. And the way this is set up is it's a very not knowing position. It's got to move from there. So, and then in addition to that, you also have like the daily 200. I think it curls up, meets it there. You've got a whip around potential for 496. If it does do that, it's like a 50-50. So I think there's a strong enough chance that one of those two is hit. If for whatever reason it didn't do that and it just held here and then continued, really not concerned about that at all. Really don't care as long as it comes above and SOS is properly above 520. The only thing I'd be worried about is if it left one of those and then intended to come back later, that it could end up becoming a distribution. I mean, I don't think it's as likely, but so yeah, there's a difference between what I think could happen, what will happen, and then what I would like to have happen. These are all kind of coulds. What I would like to have happen is it come back because I would prefer to go ahead and get those checks out of the way before the markup. I don't really want to leave it open. But I'm also not the one who's going to ultimately make the stock move. I can't move the needle. So what I'm trying to do is say, yes, I would like for that to happen. That's my bias. I think there's reason for it. I think there's a reason you would do that. I think it's evident. on a few time frames. It's evident on some of these other moves that you need to have that kind of pullback period. I think it would help everything. So, but you know, I'm also sitting here at the same time saying maybe the market on the whole with IWM, maybe it just goes back up to 220 now. Like there's not really any reason it can't just kind of advance again slowly. So I don't know what that does to AMC and GME. It's been a good day though. I hope you guys enjoyed it. I'm gonna go eat my lunch and then get ready for my peoples. That's what I meant, to come home. And yeah, appreciate you guys, new members. Appreciate you as well. And if I see you later, I'll see you later. Otherwise, we'll talk to you first thing tomorrow.